Check 1, 2.
Traders time to roll. Numbers shaking down the scroll.
Yes, indeed, 500 open 0 spot.
That worked.
Welcome into the stock market show.
CoreWeave shares rise 2.2% after the company announces $21 billion expanded AI infrastructure deal with Meta.
Captain Jim,
James,
help you cut that dry.
We should probably go over to SPX Gamma page, right?
He's steering this ship on a stock market show. It's a stock market show.
Nice. Oh boy.
Amazon shares rise 1.7% after the CEO says cloud unit AI revenue run rate exceeded $15 billion in Q1.
Sorry, I'm having some technical issues this morning. Check 1, 2. Bow, bow, bow. Bow, bow. We're almost there. All right, check 1, 2. We're closer to being ready. I want you to be careful this morning if you can. All right, let's go over to the... We got to go look at some stuff here really quick. I don't even know what that was. All right. I don't know why that's the way that is either. Something's going on my... Is it like the second Tuesday of the month? I don't know if it is or isn't, but the chat box is supposed to be behind my camera. Okay, we gotta talk. Well, first of all, good to see you. I was awake. What day is today? I don't even know what day today is. Today is Thursday. It's been a whirlwind around these parts. We did the nuclear war trade on Tuesday. And then of course I woke up I was awake all night long Tuesday into Wednesday morning, because I was minding my money. It was an outstanding day yesterday morning. But I'm going through COVID still, and so it's kind of impacting me. I keep thinking that I'm fine, and I'm not fine. I still have after effects of COVID. So the first moment I think I'm feeling better, I'm like, yeah, I'm going to do whatever I want. And that's not working. As a matter of fact, this morning I'm sicker than I was 2 days ago. But we have to chat this morning, so I have to come on. And I'll be here all day long, but just bear with me and whatever this morning. We got to talk because the JPM caller, or I have a squeezing today for another level up. And I titled this morning's broadcast Rug Pull, I think, on YouTube. The thumbnail is Rug Pull, ? And then I think I wrote Bull Trap on the other one or something like that. I don't necessarily think that it's a bull trap or whatever, a rug pull necessarily, but there's some things going on here that I do need to show you. And then I'll show you what expectations are. So just on gamma, we're going to start here on SPX gamma. And what I really want you to see here is that there is a collar up here. There's a JPM collar up here. And we should probably talk about that because, hang tight here. Can I bring up the collar page maybe?
Spot gold rises 1%.
Yeah, 6-8. I mean, it's not that we can't pop here. I think we do pop. But my point here stands that. So this, let me see if I bring this up. Hold on here. I'll bring it up. How about we bring up the collar page? Just give me one quick second here. JPM collar. Can we bring that up, maybe? I was working on this the other day.
Over 6% hit lowest level since.
And this is my issue here. Now, don't.
Down over 6% hit lowest level since January 2024.
Voice news disconnected.
Don't look at this as this is what's going to happen. But what I do want to express to you is that this is where calls get sold. Right up here. Right where we are right here. So it's not that we can't pop the collar and go higher. It's that you're being sold calls up here in a big way. And so there could be like an attempt to break out here and then a suck back in for the cross of the daily trigger. You think you're going to escape, and in fact, Theta Gang is going to eat you alive. They're going to eat your lunch. Now, there is potential to pop this collar and go higher, of course. The collar has been popped in the past, but there's a trap up here of selling you calls and reining you back in that were kind of roped in to an extent. Now, I want to show you an example of us breaking out from the collar and what that looks like, and how we can trade this to our advantage. Here's one right here. The only issue that I have with this one is that let me see here. Is that September 30th? Yeah, so this is the end of a quarter here. We broke out here at the end of a quarter and we ripped faces off moonshots, but that was an end of quarter, not the beginning of a quarter. Here's another example down over here. We were able to break out, but again, this is, I believe this was, we went down in the beginning of the quarter here, and then we did rip faces off. But what I do want to, I think the thing to remember here is when we get into the actual collar, you want to make sure we don't reject it. You want to make sure we pop over it and we backtest this thing, whether it's once and move or once or twice and move higher. Is the important thing. What we don't want to do is come up here and begin rejecting the collar. So if we pop up here, and it's 6840, so right up in here, like 6840, 685, something like that. You want to be watching closely to make sure that we're holding this and heading higher and not getting sucked back down into this close. So let's look at this close here. I think it more or less has to do with the time of quarter. It's not like we're in the middle of the quarter, end of the quarter, pop the collar. Normally pop the collar is end of, let's look at this really quick. Put this one in. Yeah, right there. So we're just at the beginning of the collar right now. There's a tendency here to want to suck us into the quarter and then an unwind end of quarter. So there's like a theta gang aspect to this. Let me see if I can put that one there. Don't look at this and think we're gonna crash. That's not what I think's gonna happen. This is the ugliest it could get here. This is the nastiest it could get. But let's look back on prior quarters where we did actually break out, and it's not common that we do. This is March, so this is April. So see how it's like end of quarter we tend to break out, not beginning of quarter. It'd be unusual for us to break out in a way. I'll show you some more in here. We can actually start. When did I start tracking this stuff? It's been a while. Let's look at, this is 2022. This is an attempted breakout in March. This is April right here. This is actually a good example right here. This is actually a great example where we come into the new quarter. It's an attempt to break out, and we get sucked back in, and it's a shit show. This is the beginning of a quarter in April. And let's look at another one here. This is we got here April, May, June. Yeah. And this is okay, so up here, right? This is June, August. I don't know why these are not in line anymore, but I'm trying to see if we can actually break out. September, October. Here's October right here. We broke out on this one. This is actually a good example right here too. Because this is a new quarter here. We break out and up, and then see how we get sucked back down inside underneath, and then we're kind of like sucked in here. This is what a collar does. Like, this is a good example right here, because what this collar does is it stops the market from running away. The collars are weird things. They're meant as like a bearish seagull. That's what is it, a seagull? I think it's a seagull. It's been a while. I think it's called a bearish seagull, but it not only is it meant to hedge, it's meant to rein in volatility on downside. It like stops the market from imploding, but it also reins in where the market can go on the upside. It like sucks price back in. And then like you can even see right here, they allowed the market to go higher here, raising the collar up. And this is kind of what you're looking at here. It's something like this. Like they suck you in, right? And they stop it, and then only into the beginning of the year do you act. This could actually serve as a great template for what the year should look like in here. It's like it just like reins the market in, and then we come into the beginning of the new year, and we rip faces finally. Right? It's that bad. This is actually a pretty good example right here of the market indubitably or inevitably stopping them. Let's go over here and look at it like this. So if you're looking at this cross right here, and you're like, oh, we're gonna hit this all-time high up here, and it's like, maybe not so fast. Maybe we get up there over there for an all-time high, and to that point we're sucked back down again, and we could literally get sucked in here, range bound. And then when we get into Q2 or Q3, what happens is you get up just a little bit. It like reins the market in from upside, like, oh my God, we're going to trade 8,000 or something like that. We're going to trade 7,500 and 8,000, 9,000, whatever the bulls are talking about. So it's not that we won't break up and away today. It's that you should rein in the expectations of where it's going, and you should also be standing back off the market to buy a dip. So where there might be a little bit more kick up here, to come back down here on this cross happening seems reasonable. So if you missed the trade on Tuesday when we're here in stream, it's okay to be patient here. We can trade this up, but just note that there should be good opportunities in here to buy dips. Like this should be a productive environment as a dip buyer. Unless things like, totally fucking collapse. I saw yesterday, I did see yesterday the Bears were out in force. Not just Bears, it was like Bears, Doomers, I don't know what you'd call them. Maybe some nation state actors. They were out in force yesterday. Talks collapsed, straits closed, World War III back on again, and I'm like, these people either missed the trade or they were short, or I don't know what they are. A foreign entity. It's the only way I could describe. I think this started on Tuesday, or it started on Wednesday morning right out the gate and never stopped yesterday. It was just relentless. Did you see the astroturfing yesterday? Anybody? I saw it all day long yesterday. So my only point here is this. If you're expecting like, boom, we're going to moon and we're out of here and never coming back, the top line would be that's not likely going to happen. It's likely that isn't going to happen. It's likely that any attempt to escape the tractor beam of the collar probably doesn't happen until we get into the end of the quarter. So that means that you should have some kind of a range in here to trade. And that would mean that you're looking at something more like this. And if that's the case, as a bull, you just want to be down here teeing off on any checkbacks on the daily trigger. And your best place to be trying to get long as a bull is likely lower. Unless you were long on Tuesday and didn't sell or something, you could do that too. So we have the bottom of the markets where you can get long. We have, hey, you got to wait. And then we have, oh my God, we got a signal, right? We've got Pakistan trying to service a truce. And now if you're looking to buy a dip again, you're likely in some kind of a, like this, somewhere in here. Yeah, something like that. And it's not something where you run away, more than likely. And every attempt to run away, you're likely going to get the FOMO gang get annihilated. And the FOMO gang is going to be looking for stuff like this. See this level up right here? This one right here? Your FOMO gang is going to be waiting for that next one where everything is fine. Suck right back in. So you want to be down here probably as we move up with this daily trigger. And being patient for those back tests on daily trigger. Is probably the thing I want to talk to you about here. So at any rate, 68.40 on SPX. What I would say to you is, it's right up here, right? You can see it right here. I would start to like 68.50, 68.60, somewhere in here. Or is that 68.50 right here? Can I move that up a little bit? It's taking forever. This isn't necessarily like, hey, everything is bad or anything. It's just that this collar right here, right? It's like time to sell calls to you. And there's likely the idea that, hey, we're going to break out of here, right? The FOMO is here, but in reality, you're likely going to get sucked back down. So I wouldn't say you can't get long here right now, but I like the idea of starting longs following your rules. The hourly triggers down here, the half-hour triggers here, prices right here. I have us going up. I have us going up, like slamming into this from this area here. But in truth, you should be probably down here on this crossover here. 665 today, 6,700. Just defending this down here, even if it's closing a gap to go higher, is where a bull more than likely wants to be, rather than trying to start this here. And the only reason I say that is the bull cap we can get this here. It seems kind of risky, to me at least. Seems kind of risky. There's not a ton of room in there. There's some room. Can't say there's not room there. But I personally would like to be down here, or I'd like to see the hourly trigger come up, and be right here, somewhere in this vicinity here. So, just as a note to you right now, I don't like instituting long. So you're kind of in the middle right now, aren't you? It seems like the middle. Does it seem like the middle to you? It's not the top. It's not the bottom. But it's kind of in the place where I'd try to clip your wings. And you got to remember, too, something else, which is anyone that got long down here, they have taken the money and run. I took the money and ran yesterday. I don't know what you were doing, but I took the money like right at 9:30. Wham, take the money and I'm out of here. We had calls go from $1.20, $1.50, $1.90, and $2.21 to $14.20 yesterday. Everybody's pockets are fat. Anyone that took that trade with us, their pockets are fat. They don't need to do anything, like nothing. You're talking a 14 or 10 to 1 payout, or basically a 10 to 1 payout on that trade up here. So if you made that money, what are you thinking? Do you really want to give your money back? Do you really want to give your money back, like a rejection here, rejection here, rejection here kind of a thing? Or do you want to be down here with the smart traders, just like teeing off on this stuff? And not only that, if we do break above here, I can institute a new trade, right? If we have like the pop the collar trade, we're out of here. The moment we break above here and start making these new highs, boom, new high, hey, we're on it. Hourly triggers up here following, daily triggers following. It's all productive. So just be aware of this. Sorry about my nails. My daughter painted my nails. If you can't see them, they're all excited because it was such a good day that I got them like a VIP BTS experience. That's what I did with my money. I took care of my kids and my wife. And I got my nails painted for it. My daughter loves me. So just be aware that as we come up into the JPM collar, you can. I'll print you a JPM collar so you can research this. I'll print you like I'll snip and post for you what I have on the JPM collar going back to 2021, and you can kind of see how the collar acts as a top. It's not a top. It's it stops upside volatility, or it stops it make, you know, like I try to dumb this down for people, which is I try to dumb this down for people where I say like the top side of a collar, or how do I explain this better? Not the top side, the top and bottom, the top and the bottom side of the collar. The intent of it is to rein the market in, and these like if you ever had like real price discovery, we'd be trading like Zimbabwe. It'd be like trading in Nigeria. It'd be like mooning down all to the bottom, mooning down to the bottom. Likely there'd be a few winners and many losers, and there'd be one guy trading with himself. I know it sounds bizarre, but so what happens is, there's another way to describe this too. If you're like JPM, you can't tell your client base, well, we had 9 terrible months and we had 1 or 2 killer months, and I made you some money this year, and the charts look disgusting. These guys want like consistent returns like 9 months out of the year, 1 to 3 months of some no returns or losses. So they got to sell you a product basically, where they show you every month, every quarter, every year, and so the market has a tendency to get reined in. Gets reined in from the bottom, gets reined in from the top, and it trades sideways and up slowly over time. You know, it's been how many years? Hundreds of years? Not hundreds of years, but it's been 100 fucking years since the turn of 1900, right? It's 2026, and we're still only trading 7,000. We're not trading like 100,000 or something like that. So that means we have a tendency to get reined in, right? Market gets reined in, we trade sideways and up. So my only point here is, if I had anything for you this morning, and you want to make these like killer trades, right? It's probably not here. It's probably somewhere down here, and then you're looking like a rock star like this the whole way up. Do it like that. You're like rock starring it the whole way up. And I want you to pay close attention to that hourly trigger, that daily trigger, and do not forget your rules. Just don't forget them. Even if the price doesn't get that close, if it starts to turn around, we have rules for that too, right? We down. We got a new high. Nice successful back test, and we're out of here. And here's the hourly, here's the daily. So pullbacks are your friend. Just let me explain, or just say that again. Pullbacks are your friend here. We're starting to break out of, we're beginning to break out right now out of a negative environment, where we're selling off of the hourly and daily trigger and the half-hour trigger. So you need to switch now to, you're switching now to buy the dip, which means that you're being patient and you're waiting for price to come near where the half-hour trigger is, the hourly trigger, and the daily trigger is, to execute your longs. Now, they're on this pop up into this trade up here. If you're going to long it, I want you to, because of where the half an hour, hour, and daily trigger are, I want you to be cognizant of, if you lose the 5-minute trigger, it's going to be a rug pull. So it's not like you can't trade it. And here's another thing here, which is cool too. Do you see where, I want you to see where this is SPX gamma. I want you to see where in cash market, I always like trading, even though I trade SPY, I always trade the half-hour trigger, and I trade the hourly and the daily on SPX against SPY. That's what I do. I follow SPX during the day, and then I follow ES at nighttime. So not SPY. I trade SPY. I trade it because of the price action within an option. SPX is way more stable. So for me, I use the triggers from SPX on SPY. And you can see here the triggers are much lower. They're way down here. If you look at SPY right now, they're not that low. Let me show you where SPY is right now. Am I on the right one? Okay. So let's look at SPY here. And the half-an-hour trigger and the hourly trigger are like right on price. So I want you to be very cautious, not cautious, but cautious that the half-an-hour and hourly on SPX is way down here. So if we begin at any points to start to lose this half-hour trigger and hourly trigger, it's going to be a drop straight down. And there's a huge disparity right now where that is. There's a huge disparity between the two of these right now. Big disparity where the hourly and half hour is on SPY and SPX. So just be aware of that, where you're like, oh, I'm on the half right now, Cap. Everything looks great. Hourly triggers right here, Cap. We're gonna fucking moon, bro. And what ends up happening is you're blasting here, two lows, and it's like straight down, like straight fucking down. You're like, oh my god, why do we lose that? We're in positive gamma. At any rate, I'm going to show you where this JPM collar actually sits right now. It sits 9:30 February 20th. Right here. My collar sits. Let's check this again. The collar sits right here. We can go above the collar, but not by much. I just want you to see where it sits. This is like the warning zone. And look at how close this is. It's much closer than you'd think. It's fairly close there, right? 680. So you pop up and, you know, I'm going to tell you right now, if you're in our Discord, if I were an options seller, I'd be selling calls. I'd be selling OTM calls all day long. Especially being so early in the so you're up here, the call selling too, and our range becomes something like this. So it's not like we can't pop our heads up here, but you know, you're doing this kind of nonsense bullshit over here, something like this. That would be the expectation. Now, if we can break above here and we start putting in some new highs, we can take these trades here. And I would feel way more confident if the SPX hour was up here, not the SPY hour. I wouldn't trust that as much as I would trust like SPX being up here. So at any rate, let's look at expectations here. Let's start with, let's go to the 1 month. Let's take a look and see what we've done. Some damage here. Check this out. And we have not taken out 80% of this collar yet, I don't think, have we? Let's look. Let's check this together. We have taken this out. This is good. So this is very positive here. So we have taken out 80% of this monthly. So it is saying we can get up here. It is saying that we can sweep all of this up here. And there's 686. So you'd expect your range to be somewhere in here. At least something like that. So there's your daily trigger. So you're looking at something like this. This seems like it's about right. Here's your month right here. We need to hold that. This all looks good. I don't like this right here per se. This is where the drop is too. You can see it already. And I think this is where the caution comes in. It's not here. Let me just show it to you here. See this right here? So what this is showing you here is this right here. Like these are your targets up here. But then I want you to see this right here. If we're doing this right here, let's say we lose that SPY daily trigger or half hour or hourly trigger, and SPX is down here. If we lose this and we're in this trading zone, like this right here tells you that we can easily come back down here. We could actually come even down this deep and still be like in this thing. So I would expect call sellers to be up here. Like call sellers are likely sitting right in here and right in here. And the put sellers are down here. Call sellers, put sellers, somewhere in this vicinity right here. If you are a condor guy or you're a fly guy or fly gal or something like that, we're close to where they're going to start selling you calls, selling you puts, or down here, selling you calls, and this is kind of your zone in this vicinity. This is a good chart for you to be watching here. I don't know if you guys like it's we're near top, near bottom, near top, near bottom. This is a great chart right here. This is a beautiful chart. You could just trade this all summer chart or all spring chart, in my view at least. Let's go look at this. This is a month. There's this sweep down below here too. Put this one right here. Hey, ED. Erectile dysfunction. Here's a daily right here. This is where you want to be a buyer in the day. Let's look at this right here. Ugh. On a positive note, this hasn't been given up. Oh, wait a minute. This is wrong. It's a 4-hour sweep down below. We don't need to, I don't think we need to know about that just yet today. I don't think it matters today, but this is where your dip buyers are for today down here. So your dip buyers are lower. Your smart money is right here. This is your dumb money trying to take out this one and be sent packing down here. Whoa. Your back hurts. This is an hour basis right here. Let's just look at this closely here together. So here's where your smart money is down here somewhere, right? This is the idea of a top up here. And I want you to ask yourself, who is saying we're going up there? There's two groups here we're looking at. Who are the two groups here? We have AstroTurfer, Strait of Hormuz is now closed, and we're all gonna die, gang, right? That could be a mix of politics, state actors, traders that are caught short in this maybe. And then you also have a second group. So you got one ear, in one ear you got, oh my God, we're all fucked. And then in the other ear, you have, oh my God, I missed that trade, I missed this trade, and now I really want a breakout trade. I want this trade. And so it's a little FOMO-y. Hey, bro, we're going to do this one, we're going to do this one, and bro, we're going to do that one right there. And I think it's trappy. I think you could be doing this, but then you're like, we're doing this, and then it's whammo, right? Or it's whammo, and it's violence. So that's what it looks like to me, at least. So, and your smart money is still lower. So you got like the doomers saying crash. You got the FOMO gang, oh my God, we're going to the moon. And then you got the trader that's like, yeah, maybe I'll just wait down here. I'll take that nice, easy layup trade. I got a lot more room than this kind of nonsense. And not only that, they got to beat this. Like down there, they're fighting the tape. Like just, it's constantly fighting. And then what's really going on here is we're in distribution. And in reality, this is like, this price action here is likely some form of distribution. So what you end up happening, your high may not be in, right? This could take days, if not weeks. You could pop up here, even up there, but then it's still distribution. And it's a matter of 1, 2, 3, and then plunge. And then the real, the patient buyer is just down here ready to buy this up. So we'll look at this really quick. Here's your R3. Here's your R4, R5. This makes sense to me. This is your fuck you zone up here. Here's R1. R2 is right on the yellow line. This is your intraday expectations. Intraday, no higher than right here. That makes sense to me. Right? R3 right here. R4, R5. Suck it, right? On a weekly basis. I'd say it's Thursday, but like now into next week. This would be the most you're expecting up in here. These guys right here. That's for today. This is for Thursday. Here's 10. Here's 12. And you can already see them. Let's just look at this price action together here. You can already see that just coming into this like 10 a.m., they're already trying to sell it, right? Wham. And they're going to try to sell this too. And they're going to try to sell this up here. And just be aware that these sellers are here. They're like already up here trying to sell. They're already up here trying to send bombs on market. So If you're going to trade this on SPY, at least, you're buying dips on the half-hour trigger, the hourly trigger, knowing that above there are a lot of sellers up there. They're gonna, every time we squeeze up there, it's gonna be hammer, 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 hammer. So just be aware that as we come up here, and you can see it right here a little bit better, that they're here. You see them? They're right here. They're just like, they're not as far away as you think that they are. And that's a lot of sell pressure up there. So if that's a lot of sell pressure, you want to be teeing off on half hour, hourly. And the last point I would make to you is that if price fails this half hour or hourly trigger in SPY, it's going to get messy. Like start seeing stuff like this, new low, second low, it's a huge drop. It's massive. So you can be a dip buyer down here. Just remember that there's not a lot of room. You know, like every rip should be sold. And more than likely your best bet on SPY. Look at how low that is. And this daily trigger is crossing the weekly trigger. So I think it's easy to like bang around up here and then straight drop down for that cross over the weekend maybe. And then we're coming back up to buy that bad boy right there. And think about that. Would you rather be like a buyer 668.50? Oh, shit. Oh, hold on a second here, guys. Would you rather be a buyer at like, 670, sorry, I just spilled my coffee everywhere. This doesn't happen often. I'm not that clumsy normally, but I'm being pretty clumsy right now. Hang tighter. I got a roll of, I'm so sick that I've run out of all of my tissue. I'm now on toilet paper here. Hang tighter, guys. I look like feeling sloppy over here. Oh, I've got an assistant helping me right now. I wouldn't call her an assistant. I'd call her person that stops me from there we go. Thank you. Hang tight here, gents. So it's like 668.5 down here. I'd rather be a buyer down here. Have that half hour trigger coming up, that hourly trigger coming up on SPX. And be the buyer down here rather than the buyer up here. So I'm going to draw this for you, or I already drew this for you right now. The expectations are higher. But I'd be doing it off the basis of this hourly trigger in SPY, and I'd be very cautious of these two W's right here. I might even say to you, you can't give up the half an hour trigger. And this hourly trigger right here will be here in some point, like you'll see it right here. Why is that not showing? Wait a second here, gents. So like this half an hour trigger is heading higher right now. We kind of need that hourly trigger to be up here. So like catch the bounce up here. They sell you down over here. And then we eventually escape somewhere in there. So we're going to draw this just like this. Come down here, sweep the low, close that gap right there. Come back up here for 12 p.m. And then see if somewhere around 1600 we can take this bad boy up. Something like this. Come down here, they're going to try to keep us in. The seller will attempt here, like they're selling right here. They're going to try to come in for 12, sell us down again. The hour should be up here, and then it's finally, boom, we're out of here. That's what I would think, something like that, to service this upside. So you kind of like, it's something like this, like service this pop into Friday. Nice little pop up here, and then we're back down into Friday. There's some reining in going on already. Let's watch this closely here. Oh, the fuckers are already coming in at 10. Already trying to sell this shit down. It's like anger. Angry bear. See this one right there. This could take all. I hope it doesn't take all day, but I hope this doesn't fucking take all of Thursday, like grind all Thursday. We ground yesterday. I hope this can start, like, get a run on for Friday close, but I have a suspicion that you're going to get sucked into this. The move has been made for the week, and I think we're going to get sucked down in here. Maybe get one more pop. I'm really interested in this hourly trigger coming up above this W right here. I definitely don't want to see price underneath this. I don't want to see price underneath this or underneath that, because we're going to start partying to the downside over the weekend if that's the case. Let's look at 30-minute Velo really quick. And this is kind of peaking here. That looks right. See this hourly right here? Cool that hourly off. Get that half. See this half hour of Velo is negative. Just kind of want that Velo to come down there a little bit. Did you say why bother with that? Why with SPX when there's Big Daddy ES? The reason, I think this show is geared towards two things. Like, it's geared towards a new trader. They trade, like, shitcos and meme stocks. You try to get them into the indexes. Their first taste is usually SPY, not SPX or ES. And then the second thing is, a lot of traders suck at ES. For the risk. I met a guy who has a prop firm, owns a prop firm, and he was like 96% of traders we get are people that fail at futures, and we fund them with fake money, and they're losers here too. So I don't mess with it here. It does. I used to try to do like day trading with like zero dates and stuff in the show, and by the time you got the information, it was like too late. Like, you're in and then you're out, then you're in and you're out. So I think I leave that to people to do on their own, like the 10-second charts and futures charts, that kind of stuff. There's a ton of prop trading shows out there. The service of this show is for market awareness for the greater market in general, and then you apply that however you want to, and whatever tools you're using. Especially if you've been in market for a long time. So let's just watch this closely here. But I agree with you. I love ES. Don't get me wrong. I love futures. If I wasn't doing this show, I'd be doing futures. And I don't really care about the tax advantages of SPX, and I like the idea of leveling money and leveling OI and all that other second, third order Greeks kind of stuff, and the little arbitrage moments of SPY that SPX and DS don't offer, personally. But everybody's got their own taste, right? Like, everybody's got their own what they trade, right? We'll watch this closely together. Just be aware here. I really want to tell you, if you're a bull, if you're like part of the 70% that loses all their money, that message I just gave was to you. If you find yourself as the supply and market, this first half of this show is directed at you. Now, you just be patient. And if we lose this if we get rug pulled or bulls are screaming, the FOMO gang is like, woo! And they get shanked up there. You just hang out down below and you're going to get the opportunity. And it's such an easier life doing that. It's going to remove you more than likely from the 70% of people that would supply for the market. So this message isn't directed to the guy over there that just said trade ES. That guy's probably a good trader. Guy probably has a lot of time in market. You're not that guy. 70% of you watching the show are not that fucking guy. You're not me. You're not that guy. So for that message in the beginning of this show was likely directed towards you. Not that guy that just spoke, the buddy, yes. Not to me. And there's likely another guy up there too. There's likely, if you don't believe me here, maybe you're love the FOMO. Go into our Discord and ask a question. Say, who here sells calls? Who here like builds an option by selling calls and selling puts? Ask them. Say, Cap's up here telling me that you're going to start raining hell on me above, and I should be lower. I'm a degenerate dip buyer, and I think that holds true here. So I've got us going up, but even though I have us going up, if I had to, hey, look at that, we're coming back down again. Check it out, baby. Look at that, down, down, down. These fucking bears. Watch this closely here today. Don't worry, I got y'all. Just be patient. I know, I said it a lot. Be patient, be patient, be patient, be patient. If you can't be patient, I spend a lot of time in the Discord Pro channel, and I post my trades in there. And they aren't frequent. It's like once a day, maybe. Sometimes twice a day. But they're good trades. They're consistent. If you add them all up, I'm like a winner like 70 to 90% of the time. So if you're ever like, what do I do? You can always go in there and be like, what the fuck is he doing? Or you can go in the general chat, and the mentors that are in there, the general chat is meant as it's not quite punishment like the market chat. It's not quite punishment, but you're basically in there because we're trying to teach you to stop being fucking degenerates. That's the idea, is that we teach you how to not be such a fucking degenerate. Jay Craven, what's going on? I know, right? It's like, just be patient. No. Not yet. Okay, right here. That's another part of this market, too. This market is not easy to watch. This market is not easy to trade. It's gotten harder. I think it's because of the age of zero-date traders. It's like you sit here all day long, and then there's that one moment where you're like, we could crash right here. As a good example, this was Tuesday. There was no all clear sign. And then it's like right at this moment, it was like 3:10 on Tuesday, 3:15, somewhere in there, where we get the okay to break through. So you just like maintain vigilance, be patient, and you don't want to give your money back to the market. You hoard that shit. You want to make good trade after good trade after good trade after good trade. So just be patient. There are intraday trades. There was a good sell yesterday, a good buy yesterday. So just be patient in this consolidative distribution type move. And if we're stuck in this range, you want to be buying the lows of it. And if we lose the range, you don't want to get banged up. You want to be buying like this like distribution range, this like sideways trade action on the bottoms, and you only want to get cut up down there if you're wrong. So if you're buying dips down on the half an hour trigger, you're buying dips on the hourly trigger, on SPY, and if you're losing it, it's not as much of a hurt. Like if you're longing it, like this is a good example, right where we are. This is a great example. So you're trying to instigate a long in this market, right? Here's the half an hour trigger. You don't you don't have to do one right here, but you can definitely mark a bottom. Like, hey, this is my bottom. I think this is bottom. You could say this to yourself. I think this is bottom. Okay, cool. You think this is bottom. I think this is bottom. I don't, but let's just say I think this is bottom. All you have to do, we'll get rid of this. We don't need this here. This thing's in the way. The only thing you need to do is be watching and following your rules. This is our prior high. This is what we think is bottom. Are you long right now? No. I think that's bottom. We pop up here. We back test nice and clean. We've taken out the prior high. And we start with a nice, beautiful green candle, and you're Johnny on the spot for leg 2. This is where the money is, right? 1, 2, 3, 4, 5. You leave the FOMO gang to trade that. And you're just like, all you're doing is like, you're not long here. This is where you're long, in here. You're long for the belly, not the bottom, not the top. You leave this to the FOMO gang over here. You leave this to the FOMO gang up here. You're just the guy in the middle. Creamy filling. Remember how your parents said, like, come here, come cuddle with mommy and come cuddle with daddy? And you'd be in you'd be in the middle of your mommy and daddy, and your mommy and daddy be like, oh, we love you. And you're like, oh, I love you too, mommy and daddy. I skinned my knee today. Kids didn't like me at school. That's where you want to be. The creamy filling. I should like make a t-shirt that's like that. This creamy filling. That's so gross. Creamy filling. Make a great t-shirt. That's where you want to be, right there. Big fat fucking arrow, creamy filling. And then FOMO right here. This would be a great t-shirt, by the way. FOMO. FOMO right here. You like being in the creamy filling. So we can mark these out and see how they're putting in a new low right here. Hey, you didn't lose all your money. Look at how easy that is. I didn't lose all my money. I wasn't fighting the tape. I wasn't pointing fingers and disappearing. We're going to go there, bro. And then poof, I'm leaving and all that kind of stuff. So just be patient in here. That's not the bottom, is it? So we'll wait to see if we get a bottom buy. This is the 1 hour right here, by the way. Should draw this in. This is your 1 HR. Don't do anything. Not a thing. Let's see if we can look at this again. We definitely don't want to open these doors. This is what the bears want. Fucking bears want to open that door today badly. All right, here we are. Let's watch this closely too. We can always mark this bottom again. You can do this all day long. Just mark that bottom right there. All day long. You're just marking bottoms. Yeah, I think they're going to try to come in and sell this fucker down at 12 too. Don't touchy. That's just a marked bottom. That's all it is. You're just going to watch it. You're just going to sit at home in your office, wherever you are, and you're going to watch. You got a new prior high over here, but I think that's part of the same high, just so you can see it. This is the same prior high. It's not this one. It's this one. It's this one right here. 1, 2, and 3. That's the one you want to be watching right there. Even all this doom and gloom and all this, don't worry about that. I'll draw this in if you want, but I don't think it's true, but we can draw it in. And we'll keep moving it left to, or to the, we'll keep moving this to the right. until it shows itself. And no, we do not take the long on this one. We're just watching. That's it. Good morning, by the way, out there. It's been a good fucking week, huh? Hold on a second here. Okay, and we got a lot to go over here. We have a ton to go over. Let's start with geopolitics. Let's start at the beginning. I gotta check something here. I gotta watch. One quick second here, gents. One, two, three. That could be three right there. It's pretty close to being three. One. I don't know if that's three. That's one. That's two. There might be one more. It could be one more high. No, that's one, two. Maybe that was two in this open. One, this is two, maybe one more high. I think we can get one more high out of this. Let's watch that closely there. We think that's bottom. I'm going to remove that just so you can visualize that at home. You don't need me to do that. I'll keep moving this over and over and over if it doesn't show itself. But you get the gist. Marked bottom. Waiting for price action to show the way higher. And I do have the bears attempting, even if we were to get up here, I do have the bears attempting to slam us down over here. Sorry, you can't see that, but I'll show you where it's at. So even if this does get bought right here, there's like 1, 2, 3. It's like right here, maybe even right here. 4, 5, and then teeing off again to the downside over there. This is best a scenario, I think. Then that hourly trigger comes up. And actually, this hourly trigger should propel us higher here. And the hourly should have blown off enough velo. You don't need to see that either. You already know what that looks like. Wing on wing. Get a wing here. Another wing. And then eventually you go up there and hit it. Could do it right here, though. Still not the high we're looking for. We need one more. You want to see that one right there? Sorry about that. I'm having some chair issues. All right, we're going to get to the geopolitics out of the way and see if we can move into a new topic of conversation. So we want to do like an after action report on geopolitics, see where we stand on that. And then what we'll do thereafter is we're going to chat about, gamma. We're going to start at the beginning with geopolitics. Then we're going to talk about gamma. Then we're going to talk about, you've already talked about ICT. Geopolitics, gamma, then economic data, and a look ahead and to see what's going to happen here for the rest of April. Today is the 9th. It would be nice to get down by the 15th to buy a dip.
Shows AI could boost productivity. Excuse me, IMS Gorgieva says IMS IMF analysis shows AI could boost productivity by up to 0.8%, but could also affect 60% of jobs in advanced economies.
Oh, we got to talk about econ data and rates and the minutes from yesterday. Let me write all this down, make sure we get through all of this today. I still love using a pencil and paper for some reason. I still love to write. Anybody out there still like to write? Is it just me that likes to write? Everyone tells me I shouldn't like use a notepad, use your phone. I'm like, nah, I still kind of like using a pen. I was using a regular pencil for a lot of years in this show, and I finally made the jump to mechanical. I mean, I've always had mechanical pencils. I do like drafting and stuff with it, but I finally shifted to a mechanical pencil for everyday stuff. Anybody out there like mechanical pencils? I don't use them normally. I only use them for like drafting, but other than that, I've always liked a good wooden pencil, and I like the idea of sharpening a pencil. I like the idea, like I feel like the feel of it. I like the feel of a pencil. I like having like a stack of pencils. I think in today's day and age, it's kind of like I don't know if it's because I'm an old man or something. Maybe I'm a boomer now.
Lebanon says solution is truce, then direct.
Anybody else out there still like using a wooden pencil? I do. But I did make the jump to a mechanical, like full-time mechanical now. You guys have mechanical pencils out there? This is a Graph Gear 1000 Pentel, excuse me, Japanese pen. I got a bunch of different kinds. I got expensive ones and I got cheap ones. This is the one that I use for drafting, so I was like, I'll make the jump. Oh, shit, I just lost my lead. Please tell me I've got more lead in there. I don't need more lead. Oh, I got more lead in there. Okay, we're good. Okay, so we got geopolitics. We definitely know that Trump wants to fucking move on, right? We all know that. Well, then we're gonna wrap that bullshit up for right now. And then we're going to go to econ data. No, we're going to go to gamma, do a quick gamma review. The gamma's changed. We're above the daily trigger. We're in the grind. Can you give me that new high, please? Give me that new fucking high. Give me that new fucking high. Give me that new goddamn high. And then take us high into 12 p.m. There it is. A nice little pop. A little bit more. All right, get up there. You can do it. Slap the fuck out of that ass up there. Good. Nope. Yeah. I think that's close enough. That's close enough for me. So we're buying back tests now. If you want a nice little intraday trade, there's a good one setting up here. Watch this closely. Any intraday traders, just wait for the back test. Okay, so we've got gamma. We've got gamma, and then we've got econ data. And the econ data also includes the minutes. We're going to go over that. And then we're going to... So we've got this and that, right? Talk about that one right there. Let me just check CL really quick. I meant to show you this morning too. Like CL hasn't broken down yet. CL still holding itself up. Where is... I got to do the collar for you today too, right? Post the collar in the Discord. And then I have, what is VIX doing? What's the VIX 9-day doing? VIX 9-day, the best, VIX 9-day is looking sketchy too. VIX 9-day is either going to fall off a cliff. Let's look at that really quick. So this is where we've got for VIX 9-day. So you can see it. And I've got VIX 9-day stopping here, but we also have like a, if we could crater this, and then a whipsaw, that would be conducive to the squeeze higher. Squeeze higher, and then the roll. And this is where the bulls would be living up here. Let's go over here. Watch this closely together so you can see this part into 12 p.m. This is your prior high right here. Nice little beat on that. We're looking to take this one out right here. Then looking to take this one out right here somewhere, right in there, like 675 or whatever, until we get into 12 p.m. And we'll see what these 12 p.m. I move that like that. Let's see if these guys become buyers or sellers. Are they going to try to punch us down again? They're right up here. Try to beat us down again into the, come in here and try to punish us. If we do get the new high on this one right here, we can squeeze and start squeezing higher and higher into the close. But we'll take that when we come to it. CL still holding on. Just check Brent really quick. Ooh, Brent looks bullish too. And this collar, been doing this collar for so long, I can't even get it all on the same page. I'm gonna have to do 2 pages of this. Hold on. Holy shit, we got a ton of these. All right, hold on. I'll do it like this. We've got so much data on JPM collar that I think I have to do it twice. Fuck is the snipping tool? Escape. We do pop the collar. We don't escape it. We don't escape the collar until near quarter end. Here's the second leg right here. This is the middle, the belly. You got your 1 right here. This is your 2. This is where the money is. Nice, easy intraday trade here. This is your 2. This is your 3. Your 2 is can be right here. And this is your 3 right here. Yeah, you get like if you look at if I can I don't know if I can screenshot that better for you, but if you what you want to be looking at is like when the collar has been lowered. It's not that you can't escape. It's a bad word for it. It's like you can pop the collar, but you'll get sucked back down. And if you notice closely, even collars for following quarters, like the market will attempt to just raise them ever slightly more. So what it does is it makes the year. What it does is it like, if you're looking at the year, right? Like if this is the full year, so we have this big like drawdown in spring, right? Bigger than expected. We're like coming back up here. JPM's going to attempt. They may not be successful, but they're going to attempt to slow down the next. You know, like they'll try to suck us back down, rather than like start mooning. They're going to attempt to strangle us into.
IMS Gorgiva says central banks cannot afford to
to strangle the market for Q2, Q3, and like limit upside. And then historically, at least, we tend not to like explode until like the end of the year, beginning of Q1. And then we explode to the upside and we get the big print, and we do it all over again. At any rate, there's the collar. Not saying we can't escape it. Just be aware. And there's a good thing in here too. If you look at that chart that I gave you, those 2 charts that I gave you, you want to be also paying close attention to the collar. You want to pay close attention to where the collar is from last spring. We broke out finally May 15th. So if you're at home, open up the chart from the most recent collar, right? And then I want you to look at the big drawdown in 2025. And if you look closely, we plunged down into April, right?
IMS Gorgiva says there are risks that
and making to show you this here. I'll explain it better here.
And that could throw cold water onto growth.
So a more recent example would be this one right here. So this is a more recent example. Here's April, right? And this is kind of where we are. And we're kind of doing this right here, right now, right? Trying to break out. But notice how like we still got sucked down. And then we broke out here. And the reason you want to pay attention to this is because if we're able to break out, this is the end of the quarter. We're finally like holding. And if we can get high enough into the end of this quarter, we can start talking about the collar being raised even higher. And then it's like grind. If we go up here, though, let's say we're like smashing and bashing, right? And this collar, we're like too low for this next quarter. This line, it's like you can do the math for this every quarter. You can, if you know where we are in price at the end of the quarter, you can roughly calculate where the collar will be. We want this next collar to be much higher. We don't want the collar to be like right here. We want the collar to be way up here. So price and end of quarter is going to matter. If we're getting sucked down in here and we're too low, then the summer expectation would be much lower. It'd be in here.
To sell 50 billion in 52 weeks.
So anyways, just for the rest of the, and if you look at prior examples, we got sucked back down. So you just want to be conscious of, as the quarter moves forward, price action will matter.
On April 13th to settle on April 16th.
price action will matter. Like if we're reined in for the rest of the quarter, and we can't get high enough into the end of May and June, then that would dull summer. If we get high enough in the end of quarter, then we'll get a new JPM collar that allows us to go higher, theoretically for Q3. So pay close attention. I'll do it for you. But just be aware of the call sellers on quarter, on those hot, and that 685, 686, somewhere in there. Just be aware that they're going to be up there selling you calls, and they'll do everything to not print those calls into quarter end. And it can have larger impacts on Q3 and on Q4. And the recovery from last spring, should we expect a repeat this year? I think if we had gone down to 6,000, yes. We got to like 620, 610, 6,000, and we resolved everything. I think you could expect a monster rally, but I think for where we are, it might be more subdued. We didn't go down deep enough, I don't think. So I'm actually afraid that we do go down there in the fall. We'll talk more about it, but we're kind of in the middle right now. Okay, so I posted for you the caller in the Discord. We're gonna finish up geopolitics. Hopefully hopefully we're not focusing on geopolitics for the rest of the fucking year. I gotta be honest with you guys, I hate mixing geopolitics, politics with stock market. And Trump knows it. He loves it. So I would love to move on to a new topic. I don't know that we can, but I hope that we can. Now we're going to dispel some of the noise that came out yesterday. Yesterday morning, like it was like the ceasefire was like a broken record yesterday. On socials, and I'm assuming these are state actors. I'm assuming these are fucking doomers, FOMO gang that misses the trade, you name it. So it runs a fucking litany. And the fact is, there's a truce, or the truth is that there is a truce, a 2-week truce in effect right now. And these things sometimes take time to implement. Not everybody gets the message. The internet is down in Iran. There's more than likely a bunch of different factions that the U.S. is talking to, and a bunch of factions the U.S. is not talking to. This normally takes time. This normally takes time for implementation, for cooler heads to prevail. And in the age of the internet, of course, yesterday it was crazy. It was crazy at like it started getting crazy on Tuesday night. It started getting crazy like late night Tuesday night, early morning Tuesday all day long. It was just like, I want to call it a chortle, but like almost like a wailing scream. Like you could feel the rage. So you've got 2 weeks. I'm going to read to you the most current information on geopolitics and try to get this out of the fucking way. The White House confirms that Vance will lead Kushner-Witkoff delegation in Pakistan. It's seen as positive in Tehran and Islamabad. Trump warns of more military action if Iran doesn't uphold the real ceasefire deal, after disagreement over the Lebanon truce status as part of the deal. Despite Some last-minute shots in Lebanon by Israel. Bombs go largely silent across the Gulf and Middle East. Over 250 were killed and 1,000 wounded in Lebanon from Wednesday's surprise attack by Israel's military. UAE, Pakistan, and even EU condemned the attacks. The Hormuz Strait is still effectively controlled by Iran. Only a few vessels had passed on Wednesday. TASS reporting only 15 vetted tankers per day to be let through at the moment. So it's not closed. It's not fully open. There is a truce, ceasefire, whatever you want to call it, right now, and the Strait of Hormuz is at least open to some extent. And they can always give signposts down the road. Hey, now we're letting 20. Now we're letting 30. Now we're letting 40. We're seeing signs of improvement at this moment. Polymarket has a bet out there that says Trump announces end of military operations against Iran by April 15th. It's at 7% right now. The Polymarket's telling you you're out of your fucking minds. The 15 vetted vessels per day to be allowed through Hormuz. It doesn't matter what vessels they are. It doesn't matter where they go in the world. The world oil price is the world oil price. When you fuck with the world oil price, you get hurt. You get squeezed. That's because the whole world oil supply, the price of oil is around the world. It's consistent. We don't want to manipulate oil. You have to be able to trust your commodities. It's the basis of everything else that goes on, how the whole entire world works. The associated, now you could be one country doing that, like Philippines could do something like that, some austerity, but you can't be like the U.S. trying to manipulate the price of oil around the world at that scale. 15 vetted vessels per day allowed through the Hormuz from TASS. The Associated Press has emphasized Thursday, quote, Iran's approval system.
Credit risk remain elevated despite the ceasefire.
Don't worry about credit risk. Let me tell you, I'm going to interject. We're going to get off on a tangent here. There's a lot of noise about credit risk. Credit risk is a knock-on effect of other things. There is credit risk, but it's other bad things are normally happening. We don't get credit risk because things are great. So if things improve, credit risk goes away. If things get uglier, you already know about it. It's like it's a lagging indicator, not a leading indicator. So just if you heard that up there. 15 vetted vessels per day to be allowed through Hormuz. The Associated Press has emphasized Thursday, quote, Iran's approval system for ships granted safe passage after vetting by the IRGC remains unchanged, despite Donald Trump's demand for the strait to be reopened. Quote, last week was the busiest week since the start of the war, with 72 passages, still 90% below normal volumes, Lloyd's said. The AP report continues. Most of the vessels allowed through are connected to Iran, although some Indian vessels have gotten through with diplomatic intervention by the Indian government. There are currently few indicators revealing Iran's intent for what comes next, and it could be that much gets determined on whether Israel will cease its attacks on Lebanon. Tehran has threatened to renew its ballistic missile attacks of Israel's anti-Hezbollah actions, and massive airstrikes on Beirut persist. Russia, which is an ally of Iran, has in its media published Iranian sources saying that Iran will allow no more than 15 vessels per day through Hormuz. As for Iran's protocol for allowing passage, which reportedly could include up to a $2 million fee per vessel payable in cryptocurrency, Lloyd's list outlines the following on where things stand. Vessels transitioning the choke point must coordinate with the IRCG Navy. Iran's latest guidance explicitly warns of anti-ship mines in the main traffic zone of the strait. IRGC Navy continues to vet all traffic passing through the strait on the basis of geopolitical affiliation. Optimism. Bombs largely go quiet. Asia One journalist Anas Malik writes that, quote, to my understanding, by tomorrow, first break of light is when both delegations of U.S. and Iran will be in Islamabad to hold talks. There's some optimism regarding the U.S.-Iran ceasefire holding, as it's been relatively quiet in the Middle East overnight into Thursday. I got to be honest with you out there. I felt good this morning. Like, I liked the idea that we weren't running headline risk. Outside of the doomers yesterday, we were not running true headline risk yesterday. It was a nice, quiet fucking day. We needed a quiet day. Despite Israel getting some final shots on Lebanon in. On this, Iran's president has made clear Tehran's position that Israel's renewed incursion into Lebanon and against Hezbollah violates the ceasefire, warning that these actions could make talks moot before they even begin. Reuters observes, quote, even as the U.S. and Iran seek to cement a ceasefire, Israel is seizing more territory from its neighbors in preparation for a long, drawn-out conflict across the Middle East. Israel's creation of buffer zones in Gaza, Syria, and now Lebanon reflects a strategic shift after the attacks of October 7th, 2023, one that puts the country in a semi-permanent state of war. For Masoud Pezeshkian, Israel's renewed incursion into Lebanon is a blatant violation of the initial ceasefire agreement. This is a dangerous side of deception and a lack of commitment to potential agreements. The continuation of these actions will render the negotiations meaningless. Our fingers remain on the trigger. Iran will never abandon its Lebanese sisters and brothers. So I want you to, what I just read to you, I want you to think about what all of that information means. And the takeaway here would be, if you're looking for some kind of bump in negotiations, that would be the news trigger. Let's say we're on a high trading 60. Let's say we're on a high trading 68.60, and we're trading SPX 68.60, and all of a sudden negotiations break down. You shouldn't be shocked, Pikachu. Oh, we have a bump in the road. Or we're retesting lows on the hourly trigger with a second new low, and some negative news comes across the wire, and we start blooding down to sweep the lows on the squeeze higher. Don't be shocked, Pikachu. So there's room for that. We have room for that built into where we are in price action at the moment. But for now, we are trying to take out those highs. The target is 6860 on market. We'll call it 6840, and then we'll leave FOMO to clean up the mess at 6850 and 6860. Still, Gulf countries like the UAE have not stated that no air threats have been detected or are inbound in the past hours. Also note that this Islamabad thing should take place tomorrow. Still, Gulf countries like the UAE have stated that no air threats have been detected or are inbound in the past hours, which is a rare positive development. There has been a decline in Iranian attacks across Arab states in the Persian Gulf region. Also, Israeli society has begun to return to normalcy, with emergency and shelter-in-place measures lifted across most parts of the country. And Ben Gurion Airport in Tel Aviv have resumed operations as of midnight. This was last night. The reality, maybe not last night. It's like, or our local time, not too long ago. The reality of who actually controls the Strait of Hormuz told in one awkward White House press exchange. This is from Alan Rupar. You guys might know who he is. Funny guy. Question. As of today, who controls the Strait of Hormuz? Levitt's answer. We expect that the strait will be opened immediately. Question. Who controls the strait right now? Levitt refuses to answer. So Iran, beautiful, nice new intraday high here. This is gorgeous. Love seeing it. That last leg, this is where the Marines come into play. Popping it up to the upside right now. You can see the red bar above and the other 3 red bars above from there. Let's see what happens into this 12 o'clock. Nice, clean break. Beautiful trade up here. Watch out for when we do the 5th trade right here. You're going to want to watch out for when it ends for a 1, 2, 3 corrective move into 12 p.m. And we want to be careful of the sellers trying to step back in here and sending it lower yet again. Trading 675.94 right now. Nice trade, by the way. This could actually be viewed as only 2 legs. 1, 2, right there. 3, maybe one more. Maybe we get one more into this 12 o'clock. Would be nice. We'll put the other thing up here. Nope. Hold on here. Yeah, we're good. R1 sits right up here. I remember, too, that I removed the big line going up. I don't think that this looks like 1, 2, or 1, 2, 3, 4, 5. I can't tell if this is already done or if this is part of a larger 1, 2, 3, 4, 5. I'd be out here personally, but so Trump taking knocks on who controls the Strait of Hormuz. Over 250 killed in Lebanon in a single day. But the reality remains that on Wednesday, the first day of the fragile ceasefire, a mere few tankers were allowed passage through the strait before Iran shut down traffic again, citing the heavy Israeli attacks on Lebanon, which were the largest and deadliest of the war to date. Sky News reports that at least 254 people were killed by the Israeli strikes across Lebanon on Wednesday, citing government health officials. In Beirut alone, at least 91 people were killed amid ongoing rescue efforts and treatment of the wounded in area hospitals. Over 1,000 Lebanese were wounded and injured. Lebanese government has declared a day of mourning. Trump to renew attacks if Tehran fails in real ceasefire deal, oil rises. Now, you got to remember, too, that oil should remain elevated for months. So just be aware of that. So oil may at times be correlated with stock market and at other times not be correlated with stock market. Trump renews attacks if Tehran fails in real ceasefire deal, oil rises. Meanwhile, President Trump in a Truth Social message issued overnight says that, quote, all U.S. ships, aircraft, and military personnel, end quote, will remain in place around Iran until the real agreement on a ceasefire is fully complied with, end quote, warning of more military action to come if not. I want to warn you again out there. I have family members. They were called up from the reserve, IRR, believe it or not. The U.S. military is still there, and the more time that is bought, you might be thinking to yourself, hey, this gives more time to Iran to ready themselves. It's more time for U.S. buildup in the region. He is not lying here. Trump is not lying. Like, the U.S. is just the fact that we're giving the U.S. this much more time makes it even more dangerous. The renewed threats have pushed WTI back above $100. Not only that, but we still have shortages. And I was just looking at WTI, and I was looking at Brent and CL, and it's still elevated at this point. The renewed threats have pushed WTI back above 100, which is CL. There's President Trump's full truth statement, wherein he warns that the shooting can start again. Quote, bigger, better, and stronger than anyone has ever seen before. Oh, God, he's so... All U.S. ships, aircraft, military personnel, and military personnel with additional ammunition, weaponry, and anything else that is appropriate and necessary for the lethal prosecution and destruction of an already substantially degraded enemy will remain in place and around Iran until such time as the real agreement reached is fully complied with. If for any reason it is not, which is highly unlikely, then the shooting starts, bigger and better and stronger than anyone has ever seen before. It was agreed a long time ago, and despite all of the fake rhetoric to the contrary, no nuclear weapons, and the Strait of Hormuz will be open and safe. In the meantime, our great military is loading up and resting, looking forward actually to the next conquest. Oh, gross. That's so gross. America is back. Okay. Conquest. I didn't know we were conquistadors. And I didn't think we were ever that country. Iran's leadership has meanwhile been insistent on Lebanon being part of the Iran ceasefire and has, on this basis, accused Washington of already violating at least 3 clauses of the 10-point plan. It, too, has serious cards to play, especially while de facto controlling the strait and with the ability to renew attacks on energy sites in Gulf states. So not a lot has changed since Tuesday, right? Not a whole ton. The only thing that's changed is the strait is quasi-open, which it was the day of the strait, or the day of Armageddon. There's less shooting, which is good. But all in all, we're not... I think we were talking about this on Tuesday. The key point is the strait closed indefinitely? And it's not. At this moment, it's not. If we move back into that, if we have a couple weeks where the oil is flowing, there's a little bit of a little bit of a buffer again. If mid-April was doom, which we probably still get that down move into that, but really true P-doom, it's been pushed off with more weeks ahead. Nothing ever happens crowd is angry. Let me make this a little bit smaller so you can see it. Put that up there for you. Iran's leadership, I already read that to you. Iran on Lebanon violations. Quote, choose war or choose ceasefire. You can't have both. Iran's deputy foreign minister, Saeed Khatibzadeh, has told CBS News Israel's attacks on Lebanon Wednesday were a grave violation of the ceasefire agreement and emphasized the U.S. must choose between war and ceasefire. You cannot have it both at the same time. Quote, you cannot ask for a ceasefire and then accept terms and conditions, except areas the ceasefire is applied to, and name Lebanon, exactly Lebanon on that, and then your ally just start a massacre. Khatibzadeh said. Netanyahu's message has remained that Israel can strike Hezbollah whenever and wherever it chooses. In Beirut, we eliminated al-Youssef Karshi, the personal secretary of Hezbollah terror organization, Secretary General Naim Qassem, and one other person closest to him. At the same time, overnight, the IDF struck a series of terror infrastructures in southern Lebanon, crossings used to transfer thousands of weapons, rockets, and launchers, as well as weapons depots, launchers, and Hezbollah headquarters, Netanyahu said. Quote, our message is clear. Whoever acts against Israeli civilians will be struck. We will continue to strike Hezbollah wherever required until we restore full security to the residents of the north. End quote. Meanwhile, Israeli Foreign Minister Sayer says, quote, in the last 40 days, Hezbollah has fired approximately 6,500 missiles, rockets, and drones at Israel. Pakistan welcomes Vance heading up U.S. delegation. White House Secretary Carolyn Leavitt made clear Wednesday that J.D. Vance will head up talks for the U.S. side in Pakistan, leading Kushner and Witkoff. Tehran had previously expressed its disdain for the latter two, accusing them of lying and being deceptive. There was word that they were going to be removed as well, I believe, on Tuesday. The first go-around before Iran suffered the surprise Israel-U.S. attack. Their pair are also accused of lacking technical know-how when it comes to talking about the nuclear issue. Al Jazeera also freshly reports that the choice of Vance heading the U.S. delegation, quote, is being viewed very positively in Pakistan. End quote. Pakistan's former ambassador to the UN, Lodi, says, quote, politicians know the art of the possible, and therefore I think it's a good decision by the Trump admin to have Vance lead the talks, end quote. Vance has stressed that Trump is, quote, impatient to make progress, end quote, with Iran, and warned that if Iranian officials don't engage in good faith, they are going to find out that President Trump is not one to mess around with, end quote. The U.S. has claimed Iran begged for ceasefire, while Tehran insists it was the other way around. And that's pretty much it. I've got some other stuff here for you, but I don't think you need to know. But that's pretty much where we are. Top line, there's a ceasefire in place. As we come into any major resistance, I would expect some bad news. If we start to lose the hour and a half hour on SPY, I would expect bad news. And I think that these negotiations should go well. But I bet that if there is a breakdown to clear and sweep the lows, that it would be one of the breakdowns in these negotiations would be the catalyst for it. There are others. We're going to get into those because hopefully we're shifting gears here away from geopolitics. But that is the main takeaways right now. And reading that to you, you should take that as what the market is listening to and put your blinders on to what you're consuming on social media right now. You're going to get a lot of rage out there, a lot of rage, subterfuge, astroturfing, you name it, that is going to try to cloud your judgment. And I saw a bunch of that yesterday. I saw what about this and what about that? And oh my God, the strait's not really open and we should be crashing again. And you have to think about where they're coming from. Like, why? Why are you making that statement right now? Why are you pushing that narrative right now? So you have to like ask that question. Who's saying that? And why are they saying that? And it's because they want to see the fucking world burn. Let's be honest. That's what they want. That's what they want. Same crowd. So, blinders on and that stuff. Pay very close attention to price action and the headlines at major inflection points. That's what you need to know. Other than that, don't worry about it at the moment. Okay. So we're moving on from geopolitics for the moment, until they start these negotiations. Okay. The market showed its hand yesterday. Goldman's hedge fund honcho says flows are supportive but nuanced. The easy money from the ceasefire was made yesterday. Today is about digestion. As Goldman Sachs head of hedge fund coverage, Tony P., explains in a note this morning, immediately following the declaration of ceasefire on Tuesday night, this was for Wednesday, explains in a note this morning, immediately following the declaration of ceasefire on Tuesday night, the market saw a serious dose of short covering through index products. These were market hedges set by the trading community that were quickly cut. You were here, hopefully, on this show. I first went to the Pro Channel and said, that's what you were looking for. The Pakistan getting involved, take the hedge off, get long, buy a bunch of calls for tomorrow. This was on Tuesday and Wednesday. Then an hour later, I came on this show with you, and I literally typed for you on the screen. I said, alerted pro traders here to get long into Wednesday. If you're a free member and you saw that on Tuesday, you were able to jump on board the hype train. We squeezed up balls into the close. Then we squeezed up into the following morning. And some of you were in the pro channel. I even said to doggone it. He said, should I get out? He missed the first rip. I said, no, add to your position or keep your position. And if you want to add lower, if we go lower, you can, but do not cut your position. Stay long. So you should have made a bunch of money. And then Wednesday turns into digestion day. Now we're into Thursday. As the U.S. session wore on yesterday, the intensity of this activity clearly faded. In fact, the S&P was confined to a 55 basis point range in the afternoon. It implied funding cheapened. In the end, the hedge fund community finished better for sale on the day, which is notable and suggests some ongoing skepticism here. However, Tony P notes that the long-only crowd was better to buy, with wire-to-wire demand in U.S. mega-cap tech names and a bid for non-dollar index futures. Here's how the hedge fund honcho reads it. Okay, so you ready? Flows are supportive, but nuanced. Hedge funds moved their feet, but the absence of sustained demand suggests there's still wariness about near-term path. This is consistent with the tone of markets overnight. Set against that, real money wet their beaks a bit, smartly in stocks that offer first-order liquidity. Looking forward for both of these groups, I suspect higher prices would bring more demand and vice versa. From here, he warns, the trading environment will be choppy and reflexive. And I think that harkens to my commentary to you in the beginning this morning. You can trade this SPY half-hour hourly trigger all day long into this 6850 zone. But if you lose that hour and half hour on SPY, we're going to party to the downside. So just be aware of these levels, I guess. And the idea that you need price to come down to the half-hour hourly trigger on SPY, and you need the half-hour hourly trigger on SPX if you lose that. To execute along, you need space in between where ooh, there you go. Nice little squeeze higher here. Touch on the red target and S1 into 12 p.m. This is very nice. Nice squeeze higher, trading 678.50. From here, he warns the trading environment will be choppy and reflexive, with fundamentals set to come back into play. Listen to this closely here, because I'm just reading this for the first time. With fundamentals set to come back into play as geopolitical risks fades, maybe. So you just heard me 5 minutes ago say to you, we're going to cover geopolitics and we're going to leave it in the rearview mirror for now. We'll monitor as it comes to us, and we'll look for major resistance, or maybe we're sitting on the half-hour hourly trigger in SPX. Some bad news comes across the wire. We lose it. Oops, we didn't see that. We did. Wink. Or we're trading 6850. And oops, we get hit with some bad news like we weren't expecting that. And we'll shift back gears towards that geopolitical risk at that time. Pascarillo says there have been no significant revisions to the outlook for growth or inflation, which already assumed our baseline view on oil. And we're going to get into more of this econ data here in a minute. We'll review it for you as we shift gears from geopolitics to econ data. It is here that I'll tip my hat to Dan Struven and our commodities research team. Their oil forecast assumed the Strait would be closed for 6 weeks, which would have ended this week. The Brent crude oil would peak around where it has so far. For all the changes in the world, for all of the changes in the world, is it not a bit remarkable that ES1 returns to trade the 6,800 level over and over and over again, which incidentally is around the average level of the past 6 months? In fact, yesterday's 2.5% move on SPX pushed right into thick gamma at the 6,800 resistance. And what I want to show you here for a brief moment to intercede with this is here is the JPM collar. So here is the 6,800 resistance. We're coming into it right now. That's the big red bar that I have on you above on SPY. Right here. So this is SPX gamma. Come on down just a little bit more. Make this yellow. My ears are popping again. I'm really sick still. Hold on here, guys. I'm still like really sick. I have like this I have this COVID like hangover. I think I'm having some issues with my COVID here. I'm going to segue into right here. I'm going to segue into this just so you can see it. I think you can see this. You see this right here? This is 6,800. Massive wall here. Not quite a wall, but a magnet. So we're trading up into the 6,800 right now. And what do you want to see? You want to see the break above 6,800, right? Maybe a couple new highs. An attempt to be taking this stuff out, right? That's the idea, right? When we hit this 6,800, we want to talk about 6,850 in particular. This is where the collar is. Hold on here. Right in here. Just so you can see this, the 68, this is where the collar is. So as soon as we bounce up here, we should be trapped in here, right? Like 1, 2, back down, buckle your shoe. Come back down here. You can see where support is. 6,750. And then there's a chasm underneath it. So the base is trade 60 or 67, excuse me. 6,750. Having a hard time getting this stuff to come up. There we go. I can't seem to get this to come up. But anyways, this is 6,600 down below here. I don't know why it's not coming up right now. 6,600 coming up down below here. And then 60. God damn it. 6,750 is right here. I don't know why it's not showing. 6,750 is right here. And there's resistance above. So let's look at SPX gamma. We're going to move this up right here. This is the large and small call wall stuff. What we're going to do is, I don't want to delete all this. I hate deleting shit. We will anyways. Fuck it. So 6,800. This is like big no-go zone right here. Huge call wall. There's the collar. Huge call wall. Acts as magnet currently. $68. Let's call it 68.60. No, 68.40. Oh, 68. That's too much. That's too big. That's a big S&P 500. Right there. We have support at 67.50. This is the basis to buy. Oh. And the next one is down here. I think this makes it nice and clean. So calls higher at, this is it, right? It's the basis right here. Oh, I spelled assume wrong. Sorry. That wasn't a slight, Yuri. Okay, so we've done gamma. Hold on, we'll go back over here. Shit, hold on. I didn't mean to do that. I apologize. We get rid of that screen. Ah, damn it, I'm in the wrong. I'm chasing my tail now. Clicking the wrong button. I'm like a monkey slapping buttons over here. Whack, 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 whack. Let's see if these fucking sellers come in at 12 o'clock again. See if these fucks try to sell us down. Watch out for the sellers coming in at 12 p.m. They came in at 10 and whacked down the last prior high we had on the day down here. Just be careful of them trying to do the same bullshit again in here at 12 p.m. You want to go off, risk off here. Remember, too, this is 6,800. If we can get above this and put in a couple of nice new highs, we can take another long above the red box. It's just noteworthy here. You want to see like a high, another high, and then we can take the next rip higher. But just be careful at 12 o'clock if these monsters try to come in and sell us down into 130. Let's leave that one up. We can make this a little bit smaller here so we can see it. Oh, we can get rid of it. We already know that it's there. We already know we're here. We don't need that shit anymore. Next targets are up here for S2. Here's your R2, excuse me. It's at 680.54. Just be aware, just not wary, but just be aware that sellers are going to try to step in again at 12 o'clock and sell it down. We'll try to take another dip buy up to the upside if we can get above it. Leave this up here. Just note this is 6,800. It's a big, big magnet. Okay, back to what's his face? Pascario. That ceiling, this is the ceiling right here, 6,800. That ceiling holds until proven otherwise. The fact that such strong call selling showed up at 6,800 is a sign that it is where max fair value rests. Fair value, max fair value. We watch 67.40 as big support today, due to a large 99th percentile market maker strike at that level. I just posted for you the basis for bulls where it says gamma support. That's the place you long off those two. You tee off on them for us to smash into this 6,800. And there's another level at 6,600. 6,600 and 6,750 are on the chart that I posted for you. And it's for you to try to take out 6,800, eat away at it, trade the 6,850 and 6,840 and 6,860 so we can become call sellers. The key structural read is that we remain in negative gamma regime to the downside, where moves should be amplified, not dampened. Added to the vol premium has been zapped, and so sharp downside would be met with a vol bid, and that mix where big downside events happen. Digging deeper into the technicals, CTAs are currently short 30 billion of the S&P 500. That's even where we are in price right now. CTAs are currently short 300 billion S&P 500. So as we make our way up there, we hit these targets, 6,800, 6,850, 6,860. If you hear any negative geopolitical news, you'll also see CTAs add to fuel to that fire. If we lose 67.50, you would also have CTAs add fuel to that fire to sell. I'm going to post for you the CTA charts inside of the channel. Inside of the market channel. This is for you to see how CTAs can impact selling depending upon where we are in price. Whether we're on a high or a low does not matter. So I posted that for you just now. After yesterday's move higher in the S&P 500, all three CTA momentum thresholds are in positive territory. On the short term, greater than 67.13, medium term 67.34, and long term 6,400. So what they're telling you is if you lose 67.50, they're going to party with you to the downside. Yesterday's S&P 500 MOC imbalance was plus 3.8 billion to buy. I am watching for this trend to continue over the next week. Finally, here's where Pascario stands. While no one really knows anything, and this story is assuredly not over, we've entered a new phase. Listen to that closely. We don't know when the story is over, but we've entered a new phase. So if you're out there stuck on, like, oh, they're still bombing, bro. I just read a report on, I don't know. I just read a report on Twitter that there was a bomb went off in Israel or some shit. Market's going to crash. That is not the story that the market is watching at the moment. It's a kind of rear view mirror and an inflection point kind of a story at this point. The contours of a deal continue to be more clearly defined. So this week likely marks the beginning of the end. I just heard a scream out there. This week likely marks the beginning of the end. Hold on here. I need to hear the screams of the doomers out there. Hold on. Beginning of the end. You hear me? You didn't really scream there. There you go. That I'll take that as a scream. That's kind of a shitty bear scream. I need to find a better bear scream audio. Let's put it on my thing so they can scream in the distance as I say. This likely marks the beginning of the end of the story. In a marketplace that's been full of fat tails, Tuesday revealed the right tail. I don't think, however, that that's the key story in a lasting sense. I'd argue the key story is the deepest left tail has seemingly been truncated. Looking forward, after the most violent elements of this conflict subside, we'll be left with a complicated setup. I expect that commodities will vacillate around a higher plateau. And if you look today, they are still. They all still remain bid. And in turn, that interest rates will be stickier. The stock market will wrestle with those challenges, but the news of this week also allows long-term allocators of capital to shift their focus to a different point on the horizon. Said another way, and to go back to a comment from late February, stocks tend to move on from geopolitical snags faster than expected. The big exception to this rule is when energy doesn't flow. Energy doesn't flow. I said this to you on Tuesday. The indefiniteness of the strait being closed is probably the most major factor here. Not the noise, not the bread and circus, not the fighting, not anything else. Is the fucking strait closed? Is the second strait closed? Is the Red Sea closed? Is fucking, I don't know, is Karg Island closed? Is any of that shit closed indefinitely where we don't know where it will reopen? We'll take any kind of like 10 tankers, 20 tankers, then 30 tankers, then 40 tankers. They will rear view mirror this. So the $64,000 question is how much oil flows through that body of water in the next phase? If that's a risk to what you do for a living, the lesson of recent history is to hedge it directly, i.e. calls on Brent oil. So he's even giving you an option. If you are like panicked here, like, oh my God, bad's going to happen. Oh my God, the stock market's going to go to zero. Straight's going to close. The concept here is that oil is going to remain bid. I'm going to show you oil right now. So here is oil. This is CL. On any of these lows down here, you can theoretically get long the stank market from a nice, beautiful low. You know where they are. And you can also buy some calls in here. So let's say we have this interplay in here doing this thing, not affecting the markets, and then all of a sudden you buy a dip here and you're on a resistance point on SPOOs, 680, 685, 0. You can long some nice little CL calls here, and if the market pukes and throws up in a violent way, you're going to be fine, because this should remain bid for a period of time, because, of course, the molecules that flow through those pipes are going to remain elevated for a period of time, 3 to 6 months, if not a year. So you can probably hedge markets instead of indexes. You hedge via CL, or you could hedge CL through a symbol as well, a stock market symbol. It doesn't have to be in futures. So the $64,000 question is, how much oil flows through that body of water in the next phase? If that's a risk to what you do for a living, the lesson of recent history is to hedge it directly. Calls on Brent. And one more thing, this is Goldman's flagship momentum pair. As you can see, it gapped to fresh highs on the back of the 7% rip yesterday. Under the hood, think semis plus 8% versus software minus 2%. The market showed its hand. Stock operators are looking to run the plays that worked before February 27th. That wraps up Tony P and his take on market. So you're longing the stock market. You have places to buy the dip. You know where they are. You know where the call sellers are. And if you're looking for some kind of fucking P-doom on stank markets, you want a long Brent, long CL with some nice big fat calls down the road. And that is the way to hedge your longs in stock market at this point. The market is going to look ahead at this point, begin focusing on other things. And we have a lot of things to look at. We've got economic data. We've got springtime. We've got bull season. Bull season starts in mid-April, end of April. Historically, it begins May 1st or June. Normally, it's like sell in May, go away. But in recent memory, like mid-April, end of April has marked the end of a bear season. And this bear season got started early. This bear season got started middle of January, end of January. If we had an extended bull season into April, we didn't get that, did we? So the bear case is, it starts looking a little weak, right? We started early. I want Beartown from mid-January to May 28th, bro. No, that ain't happening. You get a window. So the narrative is shifting here, and I want you to shift gears with that momentum, that seasonality momentum, and the looking past this geopolitics and start looking at the things that really matter. And we're going to get into that. I'm going to take a quick break and go potty, but we're going to get into that in just a minute, which is the Fed threatening, sword rattling with higher rates, with the other shit that's being dragged through because of this geopolitical situation. How bad is credit risk? How bad is inflation? What's the knock-on effects across the world, and how do they come back to haunt us? I'm sure we'll have to price that in the fall, but we probably want to start looking towards earnings season. We want to look towards the April 15th tax deadline. We're smashing, let's say we smash up to 68.50, 60. We sell calls there. And you get another dip buy on a huge drawdown back test of the daily trigger. We long that fucking thing up into the summer months. And I want to express something to you on this topic. If you get stuck in fear, in doom, and then the market continues to rally up into middle of summer, and you're the guy holding your dick, I was waiting to buy a dip, bro. I was waiting for the crash. I was waiting for this and that and all these other things. I was waiting for 6,600. I missed the dip buy at 6,750. Before you know it, listen to this closely here. Before you know it, we get into summertime. You're not buying dips, and then we're into the sideways. Like the sideways summer doldrums, and you get left behind. So you don't want to get left behind. You want to be doing the work. What's been sold down into this earnings season, what's being accumulated into ER season. You want to be thinking about a little farther out in time into middle of summer. Where are we really going to be when you get into like middle of July? It's going to be higher. It is going to be higher, more than likely. High chance of that. And these guys are going to make these moves now for those prints in summertime. And you get left behind. Don't get left behind in this shift. I want you to shift into this new regime. Do not get left behind into the summer months. You'll be trying to play catch up. You'll see the moves up in the middle of summer. You'll just be like, oh my God, we're going to keep going higher. And then we're going to be trading sideways, and people are going to be looking to, sell into you into the fall. So I hope that this show today in particular is able to, if you're on that doom thing, like you got to shift you over to the look to buy dips on right now, buy dips on 6750, but buy dips on 6600. Target that 6850, 6860. If we slam down from there and get blooded, you're down there buying those dips. And you're literally buying dips into the summer months. You have to be able to buy dips in the summer months. Because when we get into the summer doldrums and you're screaming, we're going to go up and we're just going sideways, or I missed the entire move from spring up into the summer, you're going to be pissed off. You're not going to be a happy trader. Squeezing higher now into R2, 6,800 into 12 p.m. Huge move here. Monster move up into R2 and 12 p.m. Get rid of this now. We don't need this here anymore. 680.47 on SPY just then. And I had us going down and then up and then down. We'll see if they come in. This is a huge up move, more than I expected. Big giant move here. Almost a 2 sigma move all the way up within a 1 sigma move. Trading R2, 680.47 right now. Also, take a peek at 681. This is the prior high from yesterday. This is also an equal high leg from yesterday's high. Trading up into 681.4. Here. 49. Nice equal leg from yesterday's high. The next thing we're going to shift into, I got to go potty really quick, and then we'll get into the econ data. I got to go potty here. I'm going to take a quick break, and I'll be right back with you guys in the 12 o'clock hour. I think that's a nice segue, right? 12 p.m.? Remember, we have us going up. Where is the line that I had in here for this morning's expectations? We go back in time. Where did I delete that? It was in the way. Come on, show the line. I don't know where it is. From this morning. All right, I don't know where it is. It was here. It's gone now. I don't know what that was. I don't know what that was. I just moved that one away. I just fucked this whole thing up again. What the fuck am I doing here? I'm messing this entire thing up. Dude, where's going? Stop that. Pain in my ass now. All right, I gotta do this in an hour. Sorry, guys. I gotta do something here. Oh, did I just do that again? Okay. Where's all the lines in this shit? There we go. Why are all these lines missing? All right. We're not gonna fuck with that. I'm having like problems with TradingView today. You serious? Hey, I just dropped off, or my wife dropped off a Subaru Outback. And I don't know what she had said to you, but I just wanted to say that it sounded like the rear differential wasn't lubed or greased enough. All right, I thought she said brakes too, but I don't think it's brakes. If you listen closely, if you just take it for a drive and listen to it closely, you can kind of hear the whirring coming from the rear differential. All right, later. But all right, bye. Yep. I called for you. I talked to him. Well, I just like if you leave that noise and it's if it's not lubed properly, you're talking about like a service that turns into a major repair. You know, something easy turns into fucking disaster. The econ data is going to piss off the bears again. Retail sales. Okay, jobs. Sales. What? I'm right back on fucking trend though. We're almost back into pick your own fucking job season. We're not there yet, but soon. This is a neat little chart right here. This is a beautiful chart. That's a fucking gorgeous chart right there. Hold on, let's start. We fucked around with this recently too. Like all the little squiggles. Go back over here.
According to Israeli Channel 13 on Trump.
It's probably the
they
best
say
chart
Netanyahu
I've got
will
here.
reduce
The
the pace
retail
of
sales
fighting
chart is
Lebanon.
baller.
Iraq chief Lavrov says the US should stop the war in Lebanon and in all areas. So it's repeating what's been said before, but just Iraq chief to Russia's foreign minister Lavrov.
We've focused so much time on fucking geopolitics, like we haven't spent any fucking time on econ data. He does have the best fucking charts out there. He's got the no bullshit charts. This is going to make him rage too. The Bears. Yen carry trade is fine. theoretically.
Al Jazeera
I
closed.
mean, we're in buy everything fucking season. Like, if you wanted a narrative for like
towards Upper Galilee.
the last year's recovery, this is where you get it. If you wanted like a fundamental case for why the market should rip faces off for the next fucking 2 months. All right, I'm almost ready. I think 6850 is like right in here. It's somewhere up in here. This is 60 up in here. Retail sales and durable goods is where it's at too. They're gonna be pissed about the tariff thing. The Dems will be pissed. Bond market gets nervous about rising inflation, balloon his rate hike. Yeah, we got to talk about the rate hike. Fed minutes. April 29th, 29th. Should say like April 15th and April 29th. April 28th, 29th. April 15th, tax day. And then you've got April 29th. What, and you buy the May 1st. It's like they buy the 50 buy, of course, Tuesday, then you buy the 15th low. Then you buy like May, the first week of May. By Tuesday, by 15th, by first week of May. Mm. Yeah. So you got the bond market. The bond boys are scared about inflation.
So according to AFP, just reporting what's already been said here, Lebanon wants a ceasefire before discussions with Israel.
I mean, you want an argument for like why the market should go vertical? I got it. I got the reason why the market should go vertical. Wait until they read, or I read this to them. Fucking bears are gonna want to jump off fucking bridges over this. Well, there is one fly in the ointment. We don't have QE like we did in that environment. We had QE at that time period.
Transformers Iraq cheese.
The question becomes how long can it sustain? Like, when does inflation become bad for markets?
That will ultimately be its choice.
Let's look. Let's look
That we
at
think that will be done, but we're
inflation rate
prepared
year
for it.
over year, and when does it matter? Let's extrapolate. Extrapolate. I think I have this under all the macro you need. There it is, right there. All the macro you need. All right. You haven't looked at this one in a while. The inflation rate year over year. Unemployment rate, we don't need that one right now. We'll get rid of that. Fed funds rate. That's a biggie. When does that matter? I guess we could leave all three of these up here. Let's bring this down a little bit.
So split
Let's
EU
look
Commissioner
at
for
the
Mediterranean condemns Israeli
inflation
strikes in Lebanon,
rates and
calls
how
for
it
ceasefire.
impacts stank markets, because it actually is good. It's fake money, but it ain't real fucking money. It's outrunning inflation. I shouldn't say it's not real money. Inflation makes your money worth less. You know that, Aaron? Yep. So let's say you own a stock and it's worth $10, and your $10 is worth less, it's worth $8, then the price of that stock should go up theoretically without any other negative news on it, right? If the data's all still good or whatever. But there's a moment where inflation is too much for people. Look at this here. When do we see declines due to inflation? Right there. I mean, we're fucking right on that line right now.
See the volatility index
Let's see
down 1 point
why.
at about 20.04.
February 10th. We need some fucking. I can see why. I can see why Trump wants a cut. He wants a cut, or he wants money printer. This is all normal here. This is baddie. There's a lot that the Fed, and we definitely have to talk about the rate hike. Effective funds rate, they will start to cut if that begins to ramp. I think they're threatening rate hikes, but they're not. You're not going to get one. What's the? I don't think we're getting a rate hike. I think they're fucking lying. And some motherfuckers over here think that we're going to get a rate hike, right? Rates are the North Star. Let's look at this one.
Israeli Channel 14, quoting Defense Minister, says that the army will not withdraw from southern Israel without guaranteeing the security of northern Israeli residents.
There are lasting implications for inflation and central banks. He's talking about the ECB hiking, but all right, we're going to read this one first and then talk about it, because I have a nice contra to this. These motherfuckers are going to have to. They can't hike. There's no fucking way they can hike. They're going to be cutting. Or yeah, that's not true. They could hike and then cut. Let's get this inflation rate right here. We actually ground higher.
Excuse me, so there's probably a mistranslation there. So Israel,
Then came the cuts.
Israel won't withdraw from southern Lebanon
Hike.
without ensuring the security.
Here's your
of the
pricing in
northern
your hike.
Israeli
Squeeze up.
residents.
Grind. Cut and dump. This is a tough call here. Is that stagflip? No. The E rate is 606. That's a tough fucking call. If the E rate's going up and you're hiking into that's a tough call. I mean, in theory, right? You would hike here, like just one bump. Market grinds higher, then we roll into the fall on the hike. I bet you get a threat of a hike, but no hike until summer. I bet you don't get a hike until like late summer. What's the fucking calendar here for rate hikes? Like, I wouldn't be hiking until July. I would skip April and June, remain flat for outcomes, and then maybe in July you're hiking. When the fuck do we start hiking here? Well, we did start hiking in April in 1998, and the market fucking topped there. Yeah, I talk to myself all the time. I have an internal monologue. I discuss things with myself. Try to find out where I suck. You know what's fascinating is like 96 to 98 we're flat. Very similar to where we are right now. It's extremely fucking similar. We didn't hike, but that
Lebanese
also marked the
official
top of the
speaking to Al
bull run
Jazeera says the Lebanese delegation will consist of 3 people and will not be subject to
in June of
sectarian
2000.
distribution.
It's very, very similar price. It's very similar all across the board. The only thing, dude, it's almost near perfectly similar. God damn. The only thing is that inflation's not low right now. It's so fucking close to fucking, it's so fucking close. What's crazy is it would imply that we would moon into summertime, and the summer high would be the high of the bubble instead of it being the end of the year. I think the peak was September. August 28th. We melted the fuck up right in August 28th. They like priced it all in early, and then you get the rate hikes. They started fucking hiking into the end of summer here in 1998 as inflation caught up. And then that's when unemployment becomes a problem in May of the next year, summer of next year. That's a lot. That's a lot of. There's a lot of what ifs and ifs and buts and stuff. This looks a fuck ton like late 90s. This looks like 1998, man.
Fed bids for 30-year notes total $3.9 billion. IDF say they suspected hostile UAV enters
That
northern
spring
Israel.
low with like this low right now. So no, what is this? So that's what's that 2 years of up? 2 years of up into 2027, 28. I gotta snap some lines here. This looks like, where are we at here? So what is that right there? No, what is this? So you start hiking a little bit, you hike a little bit. It's still supportive.
CNN
The market is still fucking supportive.
There will be no ceasefire
Even
in Lebanon,
if
and talks will
they
take
raise
place when the
rates, we
bombardment.
should trade the hourly or the weekly trigger and hold it. The irony is that it pushes inflation down. The irony is it's not that negative for markets, not for right now. Well, it could be 2 fucking years until it matters. The key is here is always motherfucking no. It's always a mix of like the Fed funds rate, unemployment rate, and the inflation.
According to CBO estimates, U.S. March budget deficit at $163 billion.
Unemployment's always number 1. Inflation's always number 2. We ain't nowhere near it being a problem. You know what else is crazy about this too? This like shows that the bond market cares more that we're fighting inflation than anything else. They care more that the Fed is actually addressing inflation. which is fucking insane. Well, not fucking insane, but it's like an old adage, like, if the bond market thinks you're fighting inflation, the stock market's okay. If the bond market doesn't think the Fed cares about inflation, we got a problem. The bull market can extend as long as that's happening and inflation doesn't run out of control and unemployment doesn't run out of control. It's that fucking simple. So it brings up Moran this summer and the other guy, whatever the fuck his name is. We need fucking we need Jerome to stay in power for another 2 years. We don't have a lot of time here. There's another way to do this too. If you did the cut thing or QE thing, if you had Fed Chair Powell go away, that would work too.
Just a heads up from Ayatollah Mustafa Khomeini.
There can be an argument
says
for both
that-
sides.
And it says that important issues related to third imposed war will be published in an hour. So,
But you're
from
asking
now, which will
for
make it
2020 all over
1:49
again. 2021.
or
There's like
48.
two paths here. Sustainable market or rip faces off for 2 straight years. That's a hard. That's not going to be easy. I'm going to have to chew on this for a day or two. There's 230 right there. Half hour triggers at 675. Like to see this hold in here, 670, 52 or so. Are we above 80 yet?
It's a reminder with Mustafa Khomeini when he said that important issues related to third imposed war will be published in an hour. He's relating that to the current conflict that's going on. It's a reminder in about 10 minutes' time we get the US 30-year bond auction, with the US looking to sell $22 billion in 30-year bond reopening. Prior high yield of 4.871%, prior beta cover of 2.45. Just taking a look at some research here from JP Morgan. They say, given backdrop of stronger long end demand and somewhat more supportive valuations and technicals, they see the auction as being digested smoothly. Latest CFTC positioning data shows speculators were net short 31.6K classic bond futures and net short 268K ultra bond futures, possible sources of covering demand.
Oh. market's going to go up, you tell them the market's going to go down. Market's going down, you tell them the market's going up. You know what I mean? You know the market's going down, you tell them it's going up. The opposite of that. So when you sell them like merchandise and stuff, we either want something that's like this guy did that, like a font,
5 minutes ago now we get the US 30 bond auction price high yield of 4 spot 871%, price bid cover of 2 spot 45.
you can also make and that includes or
Going to Nikkei, Japan to tighten restrictions on metal and plastic waste exports.
what I buy like glasses that I bought over there. The ones from like you anyone that doesn't know it, it's still a conversation. Oh yeah, that's like hopefully make those summer. Think about that. You're deciding what like or you know, I retired. Like
1 minute ago until we get the one issued.
for a pair, it would be like I played some like
According to Sky News Arabia, citing marine traffic, non-Iranian oil tanker crosses Strait of Hormuz for the first time since the ceasefire.
our
10 seconds.
trade
4.871% for the one issued, 4.871%. Surely expecting the rest of the 30-year auction data. Four spot 876%, again for the high yield, 4.876%. Over the US selling $22 billion in 30-year bonds and awarding 15.44% of bids at high. Primary dealers take 11.62%, direct 24.23%, and indirect 64.14%. So it's a tail of 0.5 base points. Channel 13 quoting an Israeli official saying, "We will reduce our operations in Lebanon in the coming days due to US pressure."
Who owns that building? What's the address again? I got it right here. I got it. Can you do me a favor? Can you contact Jermaine?
Seeing the yield on 30-year US Treasury
Let him know
bond
that
carrying decline after the auction, down about 1 basis point.
been sick with COVID. Can you contact him? Can you also ask him to look up that address without the 801 in it or whatever, and ask him if he can look up what's available in that building? Oh, right here. Here's one. Hold on here. The building's big. For sale. I'm looking at the listings for it right now. The one you were looking at is the only one that I'm interested in. Unless he's got other shit in there that I don't see. Maybe Jermaine can, I'll call Jermaine. Let me call him because the fucking thing's for sale. There's no fucking way that's for sale. Oh, that's a 1 bed, 1 bath. Okay. Oh, that's the whole building.
According to Al Haddad, citing an official source, negotiations between Lebanon and Israel will be held next Tuesday in the US. Just another confirmation there. So it's adding to an earlier headline from Axios that said first meeting between Israel and Lebanon will happen in the State Department of the US. Now, just Al Haddad citing a source that negotiations between both the nations will happen Tuesday. Trump to NBC says he's optimistic Iran peace deal is within reach. So this is NBC citing a phone interview with Trump.
All right, I'm coming back on here. Give me a second. I had a few things that I deal with in the background.
Trump said Iran leaders talk much differently when you're at the meeting than when they do to the press. They're much more reasonable.
That's bullshit.
Trump says that they're agreeing to all things that they have to agree to. Remember, they've been conquered. They have no military.
There are multiple groups in Iran right now.
If they don't make a deal, it's going to be very painful.
We bet. He said that a million times. Put that right there. Okay. So this is what we're going to do. We're shifting gears from geopolitics, unless we're at a major inflection point, up or down. And we're going to shift gears here and talk about some things that we have not spoken about since end of January. We're in the beginning of April, so that is February, March, doom. 2 months of not paying too close of attention to anything but headline risk associated with the Strait of Hormuz and the war with Iran. And I think Pravorsky said it best by saying this is the beginning of the end. Inside of that beginning of the end, you have to begin to look at the impacts of the closure of the Strait of Hormuz.
Trump confirming with Trump that the conversation he had with Netanyahu about de-escalating or sizing down the attacks on Lebanon, that did happen.
I'm sure this news should get worse the higher we go.
I spoke with Bibi and he's going to low key it. I just think we have to be sort of a little more low key.
You know, you get like this whole like like doom, 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 then all of a sudden the doom matters. Okay. If this is the beginning of the end, if this is outside of shocks along the way, bumpy road along the way, we have to begin to look at economic data the impact of this closure on the economy around the world, economy in the U.S., and policy decisions by the Fed, the bond market, or Fed and Treasury departments, and how the bond market views all of this moving forward into spring, summer, and fall. I just spent some time here looking at a chart that I use called all the macro you need, and there's more macro than that you need. GDP matters, deficit matters, debt to the debt ratio to GDP. GDP to debt matters. The deficit is, as long as we're spending, that's good. We need that for a bull market, but you might not need all of that shit in this information. You really just need to know about inflation, unemployment, Fed funds rate. Those are the three biggies. The other ones are a part of that soup, but not the main drivers. And that harkens as well to like the credit risk that's out there. It's a lagging indicator, not a leading. It's a lagging on economy, business cycle, that kind of stuff. So we have to get, if we figure this is the beginning of the end, and there's going to be trouble along the way, but one way or another, this is going to end. We want to come back to Jesus moment in economic data, policy, and as that impacts the economy as we move forward. Now, for a minute, I was looking back at on this chart to 1996, 7, 8, and 2000, and we have similar economic conditions. Overall, they're very similar. What was fascinating was the interplay between how the market acts against that backdrop, and we'll look at that if we have time today. We'll end
towards the upside here. Again, this is just off the back of the early headlines we had from
this essay with that chart, but I don't know if we can get through it all today.
And you also had from the early headlines that Trump requested Netanyahu to ease the bombing in Lebanon to help make negotiations with Iran a success. And now these NBC headlines adding to that he's optimistic, Trump's optimistic that Iran peace deals are within reach.
If we can wrap up this fucking week, man, just like give us some good news, we'll pop up there, and then we can get all the bad news you want to spew to us. You can turn into Bear. What's that guy's name? Hot Tots or something? The guy from the trader.
Which is reverse gains, dropping below $95 a barrel.
Okay, so let's start at square one. We're going to set the tone here. And the first thing we're going to look at is we squeeze higher. And there's a little bit of blah, blah, blah in here, some regurgitation, but we're going to get into the meat and potatoes of it shortly at the bottom. The start of this article is ignore stocks. Rates are the North Star. So don't look at the market. Don't look at commodities. Look at rates. So we're looking at oil and what does it matter? How do you hedge with oil? If you wanted to hedge to longs to go up. And our boy Rich P is saying at this point what you want to be watching is rates. And I tend to agree with that. I just don't know the outcome. There's a range of outcomes. And I was just talking to my wife about how inflation, you can run the economy with inflation running hot. If the bond market believes that policy is in line with that inflation. So the top line would be if the bond boys think that the Fed and the Treasury Department is fighting inflation, even though it's rising, the market can go up for a period of time. Another concept here would be a lot of our data is in line with March of 2020.
National Citing Files News Agency, affiliated with the IRGC, cited an informed source saying that the IRGC, or the Islamic Republic, rules out negotiations with the US and keeps Strait of Hormuz closed until a full ceasefire is established in Lebanon.
I had my hands up here for a minute because You should expect this news, by the way, to get more dreary the higher we go. You should expect like doom. The doom should like spew the closer that we get to this 6840 and 6850 and 6860. So I have two arms up for two reasons. On the one hand, the action that the Fed, policy from the Fed, the Treasury, and the executive added fuel to the fire. We were in like similar economic conditions in March of 2020, and we were in similar economic conditions in the end of 1997, 98, 99, 2000. And in both situations, we had two different things happen. In the 2020 situation, we added fuel to the fire by printing money, basically. And inflation ran hot. The unemployment rate crashed. Then it recovered. Policy was extremely loose. And you hear guys, or we have like Jerome potentially no longer being the Fed chair. And on the one hand, and that 2020 hand, there could be an argument made that you're going to loosen conditions so much that we go moon. And I mean fucking moon. Like moon. Now, the hangover from that is brutal, right? We all know that. We all went through it. On the flip side of that, though, you have the 1998 example, and we were in the same situation then. Now, what was fascinating about that time frame was the Fed tightened, and the market continued to go higher during that tightening phase, but they only tightened a little bit. So if you got like one rate hike this summer, 25 or maybe 50 over the course of 3 months, and didn't put the money printer on, it could be more sustainable, where we could get maybe in a year and a half, 2 years of uppies, of grinding higher. This is barring geopolitical shock and all that other shit. If you were to pour the new regime and the Fed on that, it could be big uppies. But in both scenarios, I'll show them both to you. What else is fascinating about the 1998 example is in that summertime, we had the Asian financial crisis, which is similar to right now. In that time period, I'll look it up for you so I can read it to you. Tell me if this sounds familiar. I said 98. It was 1997. Excuse me. It's been a long time ago. I'm an old fucking man. The 1997. But tell me if this doesn't sound familiar. And I haven't read this in a dog's age, so bear with me here. The 1997 Asian financial crisis gripped much of East and Southeast Asia during the late 1990s. The crisis began in Thailand in July of 97 before spreading to several other countries.
From that point of view. So the informed source stated that Iran rules out the option of negotiating with Washington till a complete ceasefire is established in Lebanon, and strongly asserted this position.
Let's watch this closely here.
The source speaking to Files News says one of the operational options on the table is to keep the Strait of Hormuz closed.
The crisis began in Thailand in July of 1997 before spreading to several other countries with a ripple effect, raising fears of a worldwide economic meltdown. Does that sound familiar to you? Due to financial contagion. However, the recovery in 98, 99 was rapid, and worries of a meltdown quickly subsided. Originating in Thailand on July 2nd, where it was known as the Tom Yum Kung crisis, it followed the financial collapse of the Thai baht after the Thai government was forced to float the baht due to the lack of foreign currency, its currency pegged to the U.S. dollar. Capital flight ensued almost immediately, beginning an international chain reaction at the time. Thailand had acquired a burden of foreign debt as the crisis spread. Other Southeast Asian countries and later Japan and South Korea saw slumping currencies, devalued stock markets, and other asset prices. In a precipitous rise in private debt. Foreign debt to GDP ratios rose from 100% to 167% in the 4 large Association of Southeast Asian Nations economies in 1993 to 1996. Then shot up beyond 180% during the worst of the crisis. In South Korea, ratios rose 13 to 21%, and then as high as 40%, while other newly industrialized countries fared much better. Only in Thailand and South Korea did debt service to exports ratios rise. You don't need to know all this stuff. The biggest thing you need to know about this is that the initial thought was that it was really bad things in Southeast Asia. There was going to be contagion, economic turmoil. The contagion would spread to other nations. We're kind of here right now. We're kind of here with like, well, you know, the doomer is like, it doesn't preclude this Strait of Hormuz closure does not preclude the knock-on effects of a worldwide recession. And that contagion could spread to the United States. This was in 96, 97, but then 98 is what matters. What happened here, I'm just going to give you the top line, which is the U.S. went through a period of inflation. And the Fed was working to fight that inflation by raising rates slightly after a cutting cycle. What happened was foreign money entered the United States market. And all of that money, it was like QE from around the world. It wasn't quite US QE, but it was QE, some form of not exactly QE. What happened though is we had capital flight from Southeast Asia into the US markets. And we're also looking at the specter of China and Taiwan, a confrontation. If you were in Taiwan or Southeast Asia and that looming doom is there in the backdrop, and you got Strait of Hormuz over here, and you're living in those countries, the idea here is do you have capital flight? Like, I'm going to leave my country with my money in this country that I'm in right now and start investing somewhere that's thought to be safe-ish as we have deterioration in geopolitical situations around the world. And you can see that vice tightening, right? You see it tightening with Venezuela. You see it tightening with Panama. You see it tightening with threats against Greenland. You see it tightening with demands of NATO and demands of the UN and NATO to increase their defense spending. You see it in the war that's taking place in Ukraine, this proxy war in Ukraine and Russia. And all of these things are working in the background. All these big things are working in the background. So whether it's QE from, you get the tightening from the Fed and Treasury to make the markets feel better about itself, could lend itself to supporting markets. And if we needed QE, there are multiple outlets for it, either direct from the U.S. Or even from Southeast Asia as time passes, that could support this market rest of the year or even thereafter, another year or two, believe it or not. Even if we get hit with like bear raids and stuff, they're like, I think I said that to you earlier this week, which was, when we're looking down on a crash, like, oh my God, do we start World War III with on Tuesday with Iran? Where does it drop to when where's the Fed put? So we trade in 6,000, let's say, or 5,900, and you're starting to put longs on, and we slam down to 56. The Fed announces QE, and all of a sudden you're ripping faces off again, and you're safe again. You're closer to a bottom than you are a top. And some kind of a put, whether that put is from the Fed or from foreign nations, and inflows of cash into the United States. So I want you to keep in the back of your mind that Asian financial crisis, I don't think it's going to be the same, of course, but you should consider the idea that if you are planning on the end of everything right now, like the stock market's going to end, we're going to be trading 200 on SPY, we're going to go down and trade 3,000 and 1,000, and the world is on fire, and oh my God, my life is over. AI takeover, war with China. Just remember that where does the money run to? And it likely runs to either China or the United States, depending upon your thesis as to who will prevail. And I would remind you that you're living and trading in the West. None of you, I'm not doing a Chinese stock market show. I'm doing the U.S. stock market show. So the implication here is that they're going to stay in the United States, that the United States will prevail until it doesn't. So you would expect those people or those other partner nations to flee potentially to the U.S. at the worst case scenario. And if they don't, you'd expect the U.S. to print our way out of this. And I know that enrages people, but we have examples of this. We have an example of it in 2000. We have an example of it in 2008. It's called modern monetary theory, right? We have another example of it in 2020. So you would expect that to happen. It's kind of like the argument that we have a petrodollar. That's bullshit argument too. We haven't been pegged to the petrodollar for since the U.S. started fracking, basically. The petrodollar is based upon the idea that the U.S. is beholden to the petrodollar. We are not. Not any longer. Not right now. We're not. So times change, but you have to think that you have to assume that the U.S. is going to do certain things that don't make us bet on burning tires in Broadway in New York City.
Iran state.
So I have to say that, but
attributed to Iran's Supreme Leader Khomeini.
Because I know that's the argument out there.
Supreme Leader Mustafa Khomeini.
Goldman Sachs Delta or Rich P notes that objectively,
Expected to be at 4-day past, but it's coming.
this is still holding. Don't worry about that headline just then. Not yet. There's your first low. You'd need a second one for us to turn sellers here. Not quite yet. We're going to mark this right here. We'll just watch it closely. This is your first low. We'd look for the second one to start selling. We're not there yet. You need the first low right here, then you need the second low, then you need the throwdown somewhere in there. So we got to wait here.
It's Mustafa Khomeini just saying.
Don't give up yet on this squeezing. You're gonna hear these. You're gonna hear this commentary. It'll get more aggressive. This fucking guy here, he's gonna get extremely bearish on highs.
It can boldly be said that you, the heroic nation of Iran, have been the definitive victor in this arena.
So Rich P notes that objectively the ceasefire already looks more fragile than expected before it's even properly underway. It's very difficult to separate truth from rhetoric.
Iran is not seeking war, but will not forfeit its rights.
This is a good line, good soundbite right here. It's very difficult to separate truth from rhetoric and propaganda on both sides. This is Iran and the U.S. What is clear is that there is no real consensus around Lebanon, and in the short term, that's proving a sticking point for transit through the Strait of Hormuz. Judging by the equity reaction, markets are not that concerned yet. The bigger question is how far apart both sides really are, and whether there is genuine common ground. What seems clear to me is the strong desire, necessity from the U.S. to exit. But Iran has one core source of leverage, the Strait of Hormuz. As long as they are in a negotiation, it would be illogical to think they allow normalization of flows. Otherwise, risk losing their sole source of negotiating power. You're hearing that right now from this guy that's talking, right? Look at my nails, dudes. Look at that shit. What do these fucking girls do to me?
They love on you.
They love on me? You know, when I win big, I should be able to spend it on myself and not these goddamn kids. They better be there when I'm in my dying deathbed, or I'm going to be put in an old man home or something. I just got my kids like a total package for BTS. My kids have never seen BTS. They've seen Members, and they're going on their world tour right now. It's like their farewell tour. And they were too young at that time. They were way too young. But they were all like my oldest is like A lie. She's 18. The other one is like 12 or something. I don't want to give you exact dates. But they're like at that age where they can enjoy Disneyland. And these guys all got back from military service. They have required service in South Korea, and they're on their world tour right now. I just booked like the dopest shit for them. Like first class air, first class hotel, fucking front row seats. I got them front row fucking seats. Maybe not exactly front. I think it was 16th row in the front row, in the front box, whatever the fuck it is in these fucking, the way they do these things these days. They're in the front. It was the closest I could get available. All right, hold on. Let's get back to the story here. So, I'm talking about my nails right now. Look at that shit. What is that? What is this shit? What the fuck is that? What is that? That thing says BTS on it or something. What is that? Oh yeah, see it? BTS. I got these fucked up looking nails. Anybody Korean out there? Tell me what that means. Does that mean go fuck myself? Did my fucking kid there we go. Keep on squeezing. Keep on going. Keep on going. So I'm like touching myself like I got nail polish on or something. I don't know. So it's very difficult to know who's telling the truth, right? The propaganda, the astroturfing, the fucking constant fucking barrage of nonsense. He says, though, what seems clear to me is the strong desire necessity from the U.S. to exit, but Iran has one core source of leverage, the Strait of Hormuz. As long as they are in a negotiation, it would be illogical to think they allow normalization of flows, otherwise risk losing their sole source of negotiating power. Negotiations are slated to begin on the 10th. That's tomorrow, in the morning.
Khomeini reiterates seeking compensation for war damages.
If we squeeze up into the close of today, and we're trading higher into where we sell calls on the JPM caller, and we go into negotiations on the 10th, 11th, and 12th, what do you think about a roll? Right? So we get the market as high as we possibly can. We sell a bunch of calls, and you're leaving people with calls over the weekend. In a time when so
we're still awaiting appropriate reaction from our southern neighbors so that we can show you our brotherhood.
What is this? What did you just say? Hold on here. I got to go over here for a minute. Hang tighter, guys. It looks like they're just airing more grievances out there. It's just jawboning from Iran, reiterating before we get to the negotiations.
To a new stage in managing the Hormuz Strait.
So negotiations are slated to begin tomorrow morning. You hear the jawboning from Iran and Trump right now. So despite oil bouncing overnight, this was last night, but of course it went down this morning to a nice place to buy a hedge. Hold on here, I gotta scroll through this. Flows. The risk reward up here feels poor, but positioning remains supportive. Yeah, I agree. It's poor, but it remains supportive. I'll wait for the PB stats, which will likely read at some point. Biggest covering on record. Biggest short covering on record. We knew there was too much gross and too little net against the explosive backdrop. CTAs are likely still buyers. They don't become sellers unless we're at like 686 or we break the 6750 level. There's plenty of room for further vol compression if nothing happens. This is still probably the most important technical in the short term. So this is the short term. But I don't like the level. The idea that we are somehow unchanged from where we were pre-shock feels absurd. Look at the Russell. there are lasting implications for inflation in central banks. This is where we're going to switch into the economic stuff. This is where you want to pay attention. There are lasting implications for inflation in central banks. At minimum, they are restrained from cutting in places like Europe. Hikes are back on the table. I think people misunderstood the rates distribution. It was never about aggressive hikes into $200 oil. That tail was always a low probability.
We'll seek retribution for tax on it, and we'll take management or straight from us into a new phase.
What was being priced was something more subtle. That oil settles.
Broadcaster quoting an official says Lebanon must dismiss Hezbollah ministers from the government as.
Oh God, they're already starting the diarrhea. It's only going to get nastier. Just give me one more big, nice, beautiful headlines for us to squeeze, and then we can wrap it up today or tomorrow. What was being priced was something more subtle. That oil settles higher than expected. Refined products, diesel, gasoline, jet stay elevated. But growth does not collapse. And inflation remains sticky. And I'll show this to you in a chart afterwards, like the all the macro you need chart, just to show you like where we are. We've been here before. It's not the first time. And that's how you get a couple hikes from the ECB. Now, this is the ECB, not the U.S. Central Bank. AI winners plus AI superpowers. Into Q1 numbers, the market likely will try to pivot back to AI and the investment economy. Post Open Claw, I think the risk is that token consumption in Q1 took a step change higher.
Khomeini says Iran is resolute in taking revenge for its late supreme leader and its martyrs.
Like everybody's fucking swinging their dicks right now. Just push that back so you can see it. I'm just back testing and hammering out R2 currently. Still looking to go higher here. Yeah, we're a little long in the tooth. It's almost 2 p.m. I'd like to see one more pop if we could. I'd like to be done with this today and not in the middle of negotiations tomorrow, if possible. But if that we do, we can do that too. We've got until Friday. So OpenClaw took a Q1, took a step change higher, which is supportive for the hardware slipstream. Terminal valuation concerns be damned. Fuck yeah, be damned. We sort that shit out when the bubble pops. Nobody gives a fuck about PE values. It's build out AI. That is the literal build out AI. And that includes data centers, power, software, like all three combined. No one gives a fuck. We will revisit that thing. We will revisit that eventually, and you'll be given another opportunity to buy the winners at a cheap valuation if history repeats itself. But for now, terminal valuation concerns are to be damned. Worth pausing on the AI angle more broadly. Reports around Anthropic's latest model, Mythos, suggest it identified multiple vulnerabilities in widely used core software, including Linux. Actually, it escaped this week. It escaped via the internet. In a blog post on Tuesday, Anthropic said Mythos preview had found thousands of major vulnerabilities in operating systems, web browsers, and other software. There's more to this topic too. There's right now there's a bunch of breakthroughs on quantum compute, and that are very dangerous. There's a chance that quantum computing is breaking out right now too, behind the scenes, and breaking codes like Bitcoin. Luckily, they have paused the rollout and given those institutions access to fix the issues. But what happens when similarly capable open source systems emerge without those guardrails? The cybersecurity implications are obvious, but the deeper point is the raw power of the technology is now undeniable. I'm not sure it's tradable. I agree with that statement. It's gonna get crazy. In the short term, we are all consuming more tokens, so make sure you're along that slipstream. But this story scared me. It's not just Anthropic. You should be fucking scared of quantum compute too. I don't think we're gonna, like, we were talking earlier this year and last year about some stuff that's coming up this summer and fall, and then next year or two. And he's touching on one of these subjects right now, because we have USMCA to deal with this summer. Like, if you want summer volatility, USMCA, which is the old NAFTA. And this is something that the Trump administration has spoken about, that they would revisit this this summer. And then we have the election season volatility, and who's going to win. So far, I have it as the House of Reps going to the Dems, and I have the Senate remaining, or not remaining, the Democrats gaining seats,
direct negotiations with Israel,
so that it's equal across the board, 50-50. And then the deciding vote would be left to Vance. I don't have any of that changing as of right now. We'll monitor it as we get closer to those summer months.
Before any further steps,
we should expect that volatility to come into play sometime in like late June, mid-July, into the fall. You'll see a moment where the Dems are going to win, and then I would bet that the Dems will not win. And once that is believed by the street, you'll see like a recovery into the end of the year. Now, that doesn't mean they do win, just how it'll be interpreted by the street. If the street at any points thinks that, just like this doom with Claude, like he's saying here, he's scared, we'll deal with it when it comes. So if at any point it looks like the Dems will sweep the House and sweep the Senate and everyone's going to prison, and they hold to that, which is even, I don't even know if that's true. Like, maybe the street will be like, oh, we're going to hit a recession sooner than expected. Let's price it all in. But that's not now. So we're not there yet. Maybe the top of the bubble is this summer. Maybe like the pitchforks come out. But I'll tell you something. From what I've seen, when I look back, the Dems are in on this. So you get the nice guy, you get the bad guy, you get the nice guy. Even if the Dems win, all of it, you know, like if you're a Democrat out there, you should be writing down everything that you think everyone should go to prison for, because they did that when Biden won. And you know what they said when Biden won? Let's let bygones be bygones. Let's look forward. If you get that message, like let's look forward this fall, winter, even if you win, you got duped again. And I truly think that if you look back on the last like modern history since 2005 to 2015, everybody was involved in the same ultimate end result. It was more a matter of a good guy, bad guy as they carry us there. This is like corporate DNC. So we'll look towards that later down the road, not right now. But we do have these things in the horizon. We do have this like, and he says it here, like you can't trade it. Like he's like, you can't trade that Claude escaped. And I'm telling you, you can't trade like quantum computing going where it's gone. If you don't, you can Google search that on your own. I don't know why it's on the news right now, but quantum computing right now is doing the same kind of shit.
And the idea of urging vigilance, possible wider fire from Lebanon,
where they're breaking, quantum computing is breaking algorithms and passwords, basically passwords across the world right now. The cybersecurity implications are obvious, but the deeper point is the raw power of the technology is now undeniable. I would look at it with that same viewpoint. I'm not sure it's tradable. In the short term, we are all consuming more tokens, so make sure that you're long that slipstream. But this story scared me. It scares me too. I think it scares all of us. I think it scares everybody out there is concerned about it. There's even a state right now, Maine, who is banning or attempting to ban data centers. You don't know if that's going to pick up steam or not, but it's not something that's tradable. And the good news is that people are spending money. The market likes that, right? As long as they're spending money, you should see that same spend in the slipstream of all tokens for any publicly traded company that has AI. So on consumer growth, the picture is more mixed. With ISM prices paid at the highest since June 2022, some upside risk to CPI at the end of the week, others arguing that margin compression as firms struggle to pass through costs. Private hiring rates are at their lowest since 2010. Fiscal impulse into the second half.
Khamenei says that Iran sees all resistance fronts as united entity.
Just keep watching this closely here. I think you still have the ability to squeeze here. Just keep grinding. I got to watch this closely in case it doesn't. I think we squeeze up into the bell, but I just want to check. We can wrap this up by the end of the day. The VIX still collapsing. It is on its monthly trigger right now. If we can close that gap down below, though, or even bounce and do a quick spot up fall up trade, would be kind of nice. On consumer growth, picture is more mixed. Prices paid at the highest since June 2022. There's some upside risk to CPI at the end of the week. Others arguing that margin compression as firms struggle to pass through costs. Private hiring rates are at their lowest since February 2010. We're going to talk about that today if we can, if we have enough time. I don't know if we have enough time for this today. It's already fucking 2 o'clock. Private hiring rates are at their lowest since February 2010. Fiscal impulse into the second half likely to slow meaningfully, excluding defense companies. And there are growing concerns about AI-driven white-collar displacement. The consumer likely has the least beta.
In regards to Hezbollah, they say Hezbollah is preparing to carry out attacks in the coming hours that will extend beyond the northern border.
The consumer likely has the least beta to this rally and carries the bulk of the downside risk into the back half of the year. So basically what they're saying to you is we can go up, and as we get into the end of the year, things begin to deteriorate or the danger becomes worse, that maybe we're at the top of the bubble. And there can be an argument made that the top of the bubble will be the summer, that could be in the winter, or it could be years down the road, which would depend upon policy. Small caps, particularly the Russell, look mispriced given their sensitivity to rates and growth. So if you were looking to short SPY on a top, let's say SPOOS is at 68 or 68.60, and you wanted to just, let's say, short SPOOS down in the depths of hell, probably the best bet to short small caps on the idea that we might get 1 or 2 hikes this summer, spring or summer. I'll show you examples of that when we get to it. I'll show you examples of the Fed throwing a 25 basis point hike in the same time frame we are. So where the knee jerk is more brutal on small caps, but it's not so negative on S&P or even big tech NASDAQ. So you might get the drawdown, but not as brutal in the majors and the real pain would be on small caps. So you've got long indexes, long oil on lows, right? So like selling calls up here, and then you're buying calls on oil, and then if we're coming into our next or pricing in our next Fed meeting, which is April 28th, April 29th, on one of these highs, you're looking for small caps to do the most damage. And that's, again, April 28th, 29th. So you've got the April 15th dip to buy, which is the IRS return buy. And then you've got like the first week of May to buy. And selling into both of those events, of course. And we've got today is April 9th. So if we can wrap up the high today or tomorrow, you'd be a seller into the 15th, in and around there. Or long oil, and then maybe not sell SPUs, but like long oil. And then when you're trying, you buy the dip on the beginning of the month for May, or excuse me, the beginning of, the middle of the month for May, like the 15th for a bump. And then you'd be selling into the potential rate hike on the 28th, 29th of April. Okay. Watch bonds. Near term, we have CPI at the end of the week. It's still all about Iran, but it's worth remembering that goods-driven inflation was already building before this. Commodities were tightening. Gold was bid. Let me just check this really quick. Commodities were tightening, gold was bid, and visible inventories were at record lows per Logistics Manager Index. I'd ignore equities for now. Rates are the North Star. Credit is too distorted by positioning to be a clean signal. I agree. They fucking keep bringing that shit up, and they shouldn't. It's literally a fucking lagging fucking indicator. So he says here, credit is too distorted by positioning to be a clean signal. I agree. Hold on, maybe get rid of this one. I should have put back here where I removed it before. Stay long here. Before we get into the next part, which is risk, on CPI. We have CPI readings tomorrow in the morning. This morning, we had PCE. So PCE was fairly in line. Really hasn't come through in the tape yet in PCE. And I'll explain a little bit more about retail sales here in a minute. But we're at like veritable bottoms right now in a bunch of data for the season. And the focus should really be on like right now, like the fact that Jerome might be leaving. We have some people that want to run money or let the money flow. But even if you just got like a tick or like a 25 basis point hike, one or two of them, the market is likely to stay resilient and move higher, even if there's a hit to small caps.
Netanyahu says
on risk
to strike Hezbollah with force.
So what you can do is you like squeeze up into CPI, right? And if we get a hot CPI report and you get devolving, arguing, and in ceasefire talks, you like wrapped up the upside trade. You're now selling down into all of this doom, and you've got pricing in of, oh my God, we're getting a rate hike. It's going to be terrible. And in fact, the market should be resilient and continue higher. And I'll prove this here in a minute.
We won't stop until northern Israel is secure.
Watch out here. Just getting bunch of bad headlines right now. This should be expected. It should continue as we grow closer to tomorrow. And the higher we drive, we'll keep watching this. If I see anything that looks that ugly, I'll let you know. And there's nothing ugly yet here.
It's a reminder with the headline that we saw earlier on from CNN citing Israeli official who said that there'll be no ceasefire in Lebanon. Discussions will take place under bombardment.
On risk.
Netanyahu says we won't stop until northern Israel is secure. We're continuing to strike Hezbollah with force.
On risk. Over the next couple days, Talks continue into the 10th. That's where we are right now, right?
Just keep an eye on the markets here.
Shit talking.
500 just starting to see a tiny bit of downside movement. Did see a little bit of movement towards the upside as Netanyahu speaks here. So Netanyahu says there is no ceasefire in Lebanon.
Watch this one closely. We want to watch this prior low right here. Stay long, not yet. We want to see the rejection. This is where the short would come in and a failure. Looks like they want to do the middle of the day dump. Just watch this very closely here. It's an equal leg, but not quite a lower leg yet. I don't think they got the tick on that. They did get the tick. I think they got the tick. They did get the new low. Watch this closely for a sweep to blood us into the end of the day here. Let's watch this closely. We have a low, the new low right here. We did get the new low.
And seeing some further downside movement on the S&P 500 post Netanyahu's comments.
I'm just waiting for an exhaustion green candle up here. And then fire to the downside. On risk, over the next couple days, talks continue into the 10th. Unless they break down before they start, the market may stay relatively range-bound. If anything, the risk is the reverse of what we've seen.
Movements here now. The S&P and further upside movement on the dollar index.
The risk is the reverse of what we've seen. Markets pricing in a hope of a negotiated outcome into the weekend and waking up with disappointment on Monday. So this might be the top here. If we can get an exhaustion candle, start to think about hedging. Just waiting for the exhaustion to kick in. Listen to this. I'm going to read it to you one more time.
We intend to reach more peace accords with Arab nations.
Unless they break down before they start, the market may stay relatively range-bound. This is still range-bound here. If anything, the risk is the reverse of what we've seen. Markets pricing in, ready? A hope of a negotiated outcome into the weekend and waking up to disappointment on Monday. So if we can tag, we've gotten pretty close, but if we can tag like 6850 in there, 68540, 6860, between now and tomorrow, if we can tag that upside there, even if it takes a day or two to get there, if we can hit it.
S&P 500 and NASDAQ 100 index pairing gains now post-net.
Not yet. I got to turn this fucking guy off. I got to turn this fucking guy off. This guy doesn't matter.
Voice news disconnected.
This guy's telling you bad data, bad shit. So you're looking to waking up to disappointment on Monday. So if you get the high at 68.50 or in or around there, we're close, but not quite there. You'd want to be selling calls and looking for doom over the weekend and into Monday. Talks break down. They start pissing with each other, and we start rolling down, and the market is already poised and ready to roll. They have the reason to roll to the downside. He goes on to say, I know enough to know I don't know here. It's still a very tricky setup. On net, there is a tidal wave of technical demand supporting equities, but I don't like the level, and I don't like the outlook into the back half of the year. If vol compression extends far enough, I'll be looking to express downside via structures. So for him to be like short here, he wants to see the 68.50 or 60 get hit and then start to roll. And I think the same thing holds to this morning, which is you're buying 47.50. If you begin to lose it, you're going to be looking much, much lower, 6,600. Did I ever say that right? 67.50. You'd be looking much, much, much lower, 6,600. If we tag the resistance at 68.50, and we start rolling and losing that high, it'd be the same setup. It's the exact same fucking setup, just at 68.50. So one thing he does say here is if you wanted to short over the weekend, if you wanted, like, let's say the negotiations break down and you wanted to short equities directly, maybe the hedge is on smalls. So you're, instead of doing like S&P 500 or NASDAQ, you like short, you could long oil over the weekend, or you could, as a hedge if it's cheap enough, or you buy some really cheap IWM puts over the weekend. Now you'd have to get out of them on Monday and then get back into them again after the rip on the 15th, and then sell them or get into them again for the 28th, 29th on a high. So it'd be like a two-pronged attack against small caps for the rip that it's taken. So that's what I've got rolling us into this data. So the first thing I'm going to say to you here is I'm going to start at the beginning. Stasis in labor market. A peculiar situation by Wolf Richter. The job openings and labor turnover survey, this is JOLTS. This is back from the beginning of the month. Released, this was back on March 31st, I think. I want to say that JOLTS we got on the last day of the month, of the quarter, I think. By the Bureau of Labor Statistics, tracks labor market churn. How many people quit their jobs? How many were fired or laid off? How many were retired, died, and separated for other reasons? How many job openings those people left behind? I'm going to post some stuff here while we do this. How do I do this? Let's start here. Maybe I can put this on our chart. Can I put this on the screen maybe? Let me see if I can put this on the screen. Can you guys see this? Oh yeah, you can see this. You can totally fucking see this. How small can we go on this? Because we got to watch. Oh, we got to watch the Doom together. Can I go any smaller than that? Nope, that's as small as it's going. That's behind over there. Let's leave this down here. Let me move this over here. What? I don't think you're going to get the exhaustion candle here. I don't. You have to get the exhaustion candle to go down. I don't think it's going to happen. I think you're going to see this get popped up here, and then it's going to reverse to the upside. That's what I think is going to happen. But I could be wrong. Just watch for the exhaustion. You'll see it. This is this total separations, thousands, 3-month average, and monthly. And you want to see right where we are. This is 2017. This looks bad. This is ugly. This is bad. This is ugly. And I think this is where a lot of the hand-wringing comes from. When you're looking at like people saying, oh my God, everything is going to be awful. This is the top of the market. Everything is awful, 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 awful. God, that does look awful. Voluntary quits are very low. Layoffs and discharges are very low. Retirements and other discharges are very low. So total separations have plunged to the lowest since 2015, with the exception of lockdown months. The low number of separations means fewer newly vacated jobs are left behind. So job openings are lower. So you quit for whatever reason, and I don't reoffer that position. I'm not actively laying you off, not actively firing you or anything like that. I'm just not offering that new position. The other interesting part is no one is quitting at the same time. So everybody's staying at their jobs right now. The crackdown on illegal immigration and the tightening up of the work visa related immigration also plays into this, as it shrank the supply of labor wanting jobs, making hiring more difficult. All this makes for a peculiar labor market. And this is the chart right. This chart, that chart right there. Sorry, my camera's in inverse right now. That chart right there is total separations. voluntary and otherwise, which plunged in February to 4.97 million, the lowest since the lockdown months. And before then, the lowest since 2015. That's the blue line in the chart. You can see it right here, right in 2015. The 3-month average, which irons out the month-to-month squiggles, dropped to 5.11 million, also the lowest since the lockdown months. And before then, since 2016. Up there goes the exhaustion candle. Get ready for a drop. Can I move this over maybe just so we can see the drop? They're getting shanky here. Total separations consist of voluntary quits, 60% of total separations, layoffs and discharges, which are 33%, and retirements, other separations, 6% of total separations. More on them in a moment, though. But in that decade, employment has risen substantially, and this low rate of separation shows that a form of stasis has spread over the labor market, an unusual equilibrium in the U.S. labor market, which is efficient for employers. But it makes it hard for young workers to enter the job market. Voluntary quits. Can I bring this one up next? Oh, fucker. Can I do it like this? Right here. This is voluntary quits. Ooh, nice. Voluntary quits plunged in February for the second month in a row to 2.97 million, the lowest since the lockdown months, and before then, the lowest since 2017, 2018. So if you're employed right now, this is important shit. This shit's good for the market, but it's also good for you to understand this stuff. If you're working right now, more than likely you're hearing the drumbeat in social media of, oh, I can't quit my job. There's no jobs out there. There's no jobs available, and no one's getting jobs. People are being laid off everywhere. I got to keep my job as long as I possibly can. And I think you can hear that on socials, right? So the voluntary quits plunged in February for the second month in a row, right? These people are quit their jobs voluntarily, such as take a better job elsewhere, but not include people who retired, died while employed, etc., who are tracked separately. The 3-month average dipped to 3.11 million. Quits are the biggest source of the labor market churn and account for 60% of total separations. Let me read this to you again. So voluntary quits plunged in February for the second month in a row to 2.97 million, the lowest since the lockdown months, and before then the lowest since 2017, 2018. These are people who quit their jobs voluntarily, such as to take a better job somewhere else, but do not include people who retired, died while employed, etc., who are tracked separately. The 3-month average dipped to 3.11 million. That's in red. Quits are the biggest source of the labor market churn and account for 60% of total separations. Fewer quits means fewer open slots left behind that would turn into job openings, and then into hires to fill those job openings. Layoffs and discharges. In the thousands, the 3-month average and the monthly. Retirements and other separations, including death while employed, etc. The 12-month average, which irons out the huge month-to-month squiggles, edged up to 297,000 the last few months and were the lowest in the data going back 25 years. They account for about 6% of total separations. Retirement and other separations. You can see the same here. And job openings are a result of total separations that have dropped to a decade low. So job openings have sunk below where they'd been in 2018-19 in February. They fell, giving up part of the jump in January. The 3-month average, which irons that stuff out, was roughly unchanged for the third month in a row. I'm going to show you that chart right now. We're just flat right now on job openings. That's the 3-month, the monthly, and the thousands. Just to show you this really quick, because we're going to talk about this more importantly later on. I want you to see this right here. This blue line is where you get all of your doom. Like we smash down here, oh my God, we're going to crash. Smash down here, oh my God, we're going to crash. Smash down here, oh my God, we're going to crash. Smash down here, oh my God, we're going to crash. And yet we recovered again on the seasonal adjustment. So when you have the little squiggly lines, we haven't sold yet, boys. They haven't given it up yet. Buyers have not coughed it up yet. Watch this closely. Still no exhaustion. I thought that was the exhaustion candle, but it wasn't. Is that showing? Is this what's going on with this? There we go. The number of hires dropped in February after the jumps in December and January. The 3-month average dipped to 5.16 million, right where it had been in December. I'm on the wrong chart for that. Right in here, you want to watch this one very closely, right down here. The number of hires dropped in February after the jumps in December and January. The 3-month average dipped to 5.16 million, which also induces fear. But again, we don't watch the blue line. If you watch this closely here, I want you to see this. This is jolts. And so when you see, watch my hand palm here, when you see like the consternation and hand wringing, it's on the blue line. But if you look at the red and the black line, the red line that's hidden in here, you'll see that the 3-month average does not show that decline. So you'll hear me sometimes talk about, on the show, you'll hear me sometimes talk about knee-jerk reactions on data on a weekly or monthly basis. But you need like 3 months of data to begin a story, and then 6 months to a year of data to begin to want to price in the doom. So the number of hires dropped in February after the jumps in December and January. The 3-month average dipped to 5.16 million, right where it had been in December and above November, so roughly stable for the past 4 months. This is where you don't get that information on like Twitter. Like they don't tell you, yeah, if you look at the last 3 months or 4 months, labor is stable. All you get is the headline of unemployment is bad, jobs are bad. Look at that jobs number down there. It's horrible. But what they don't tell you is that if you look at the 3-month average, it's all in line. Most of these hires replaced workers who separated from the company, leaving open slots behind. Only a tiny portion were hired to fill newly created jobs, but the JOLTS data doesn't track that. The employment report to be released on the 1st, I believe that was the 1st. Could be wrong. No, on the 4th. The employment data was released on the 4th. But JOLTS doesn't track that. The employment report to be released this Friday, the 4th, attempts to track that. These are low levels of hires, the lowest since before 2015, beyond the lockdown months. But with so few total separations, the lowest since 2015, there are fewer job openings left behind and less need to hire people to fill those openings. And the question becomes, like, I think that top line risk, I know that Rich P was talking about something else with the danger, but it's similar to like inflation. If we want corporations to be profitable and they need less people and they become more efficient, and if people can continue to spend money to keep the economy cranking, even if it's a small part of the economy, the K-shaped economy, and we're chasing corporate profits, you should expect good corporate profits when we are not rehiring to replace and people are still spending. And we'll get into that in a bit with retail sales, which is fascinating because retail sales and durable goods are at seasonal lows right now. So you're expecting those to bounce. The turnover in the labor force had exploded in 2021. You can see it right here. Explosion in labor force and hiring force, right? You see now like companies like Oracle laying people off from that big hiring spree that we did in the 2020s. The turnover in labor force has exploded in 21 and 22 during the labor shortages. A lot of churn like that in the labor market is expensive and inefficient for employers. But it resulted in the reshuffling of the labor force, with more people switching to jobs and industries that were better fits for their aspirations and who were better fits for their employers, which allowed for the churn to calm down in this peculiar way. So let's look at this from another perspective. If we're looking at this is the trend we were on right here. I don't know if I can draw that in there, but we're back to levels unseen since 2015. And we also have, are they really trying to fucking dump this? Come on, man. Stop this bullshit. Just start squeezing. We know we got to squeeze this shit up into the close before these people go crazy at each other, before they start the rhetoric tomorrow. Bring that back up. But the takeaway from this data that's right here is this. You have a group of people that's like, there was a time period, even on the show, there was a time period where, I wish I could go back and pull this stuff, but some of you probably remember, there were time periods during COVID where I had said on this show to you, this is the time to look for a new job. This is the time to not whine and complain. This is the time to not be left behind. There are more fucking jobs on offer today. They're giving jobs away like free, like candy. Here you go. It's a job for you. Oh, you want $30 an hour to pave the road? Sure. So whether you did or didn't move, no one cares. If you chose not to, no one cares. If you're a part of those people that didn't, nobody fucking cares. Everybody else did. So you have that anecdotal evidence. Well, I got left behind, bro. My rent is too high. My job sucks, all this. But in reality, everyone did take those jobs. The majority did. And they did it again in 2021. They did it here, and they did it here. And so now on Zeitgeist, what do you hear as we come back down to normalcy? Complaining, right? You have 2 periods of rampant hiring, and then you move back into the norm, and everyone's pissed, right? I'm not being offered the same jobs at the same rate that I was being offered 5 years ago. I want to move on I want to get back into that same job market again, and it's not here. And we're moving back into more, it's not normal. Peculiar is a good way to describe it. It's not normal, but at the same time, corporations are more efficient. They're making more money, more profit. There is still money out there, and you're still keeping your job. If you're a part of the workforce, you're still working. You're still paying your bills. And you've heard me say in the past that when people stop paying their bills or they're really getting laid off and there is no work, you're going to see your friends will divorce. This is what happens. Your wife will take the dogs. Your wife will take the cats, take the parakeets, take the hamsters, take the fish. They will leave you with all the debt. They will take your fucking kids, and they'll bounce. And you're living in your neighborhood, and you're got a nice little cul-de-sac, and you're like, wow, man, the Johnsons haven't mowed their lawn. Matter of fact, I haven't seen Mrs. Johnson in a while. The Smiths over there, they stopped mowing their lawn. My God, is there a man over there ripping the cabinets out of the kitchen? Why is that guy ripping the cabinets out of his kitchen? Why is Bob over there putting cabinets in the back of his fucking Toyota Tundra? You know what I mean? That guy's, his F-250 that cost him $150,000. Why is he now ripping the marble out and putting in the back of his F-250? You know, when you start to see that stuff, that's when things are bad. We've had many experiences with that, right? Late 80s, 2000, 2008 to 2020. No, not so much 2020. 2008, 2000, 87. In those neighborhoods, I remember seeing that shit happen. I don't see that right now. We don't see that in public right now. And that's because people are still working. And as long as they can continue to work and make money, pay their bills, inflation doesn't get too high, and the workforce isn't clamoring for these jobs. We have workforce participation rate going down. 2, We have illegal immigrants being removed en masse. We have illegal immigrants unwilling to illegally immigrate. We have illegal immigrants that are living deeper in the shadows than they've ever lived in this country. So it's very peculiar right now, right? It's not great. And I want you to think about that. If you wanted the labor market to be like the last two most recent periods of great worker, God, this is horrible to say because it's the stock market. If you're looking for that environment, you're asking for major QE. You're asking for printing money, basically, right? Very easy policy. That's what you're asking for. You're relating this to those two previous moments. So, like our recall memory is of COVID. You know, as a worker, we're asking for that. That's what we're asking for, right? Basically. And I know that's a tough pill to swallow. So think about that when you're out there working a job, like, hey, I want that same job environment where I could ask for, double, triple my money. And how do you get that? So how do you get that money to keep up with inflation? You need inflation to ramp, right? To where you can't afford it anymore. To where the economy slows, to where you can't pay your bills anymore. So you're literally asking for that. Now, on the flip side of all of this, is there hell to pay down the road? On the flip side of this, like the companies don't create new jobs. They're becoming more and more efficient. Is there a breaking point? Yeah, of course there is. I think we've all spoken about this with UBI or some kind of dividend UBI. And if AI takes all the jobs down the road, they will have to step in, but not at this moment. Not right now. The next one we're going to switch into is retail sales. They plunged in February, but huge seasonal adjustments caused them to jump. I'll look at both. Look at that, retail sales. Whew. Let me show you guys something really cool here. This is retail sales. And the good news for you, all right, I got to do the expectation, right? The good news for you is this. This is the nasty headline. And this is really where we are right here. So what you're going to expect is for this to go up in a meaningful way into summertime. You see that? So this is 2023, right? Doom and gloom. And then the intra-week, intra-month retail sales numbers. That's right. I love getting back to the economy. If you look at those retail sales numbers, I'm going to show you some durable goods numbers too. If you look at all the headline noise of everything is horrible, if we can't get to it today, I'll get to the rest of this tomorrow, but all of the numbers look like that. All of the numbers look like that. All the ones that are supposed to, like if they're at a bottom and not a top, they're at the bottom. And they look good. They look really good. This retail sales chart down here for this doom and gloom is pointing up. And not only that, if you look at the seasonally adjusted, the red line, right here, they're still climbing right now. This implies that our GDP is still good. This implies that the money flow is still flowing, i.e., own a company, I pay you, you pay your bills. You don't stop paying your bills. You go out and you buy this and you buy that and you're buying this and you're buying that. It's still running. It's still running right now. So this economic data is good. I'll get back to this here in a minute. We'll go if we have time, I'll get back to it. If not, we'll start tomorrow with retail sales, durable goods, unemployment. We're going to get into the yen carry trade, the bond market, and the Fed. It's a big, heady thing. We'll do this all Friday. We're not going to listen to those guys tomorrow. We're not going to listen to the arguing tomorrow. Let's go quickly to expectations into tomorrow. I'm on the wrong page. Let's go to the top right really quick. We have the initial rejection above here. This is SPX. This is the JPM collar right here. We can draw one more line in here. We'll draw one more at 640. I missed that one. I'm sorry. I'm going to just show you really quick what we're looking for here. Something like this. Something like that. And then dump. Something like that right there. There's Monday. This is the rich P. Oh my God, everything's awful, terrible, horrible. That's what it should look like, something like that. Let's go to the week. Let's go to the month. Is your expectations for tomorrow? Note that we took out what was needed for today on a daily basis already. There, get rid of this for a minute. Let me get, I have to just do one more quick thing here to figure out where 6840. That's where the collar is, right? Fuck. bring it to the front. There we go. Just pain, that's it. $684 or $685 right there is where the 684.50 there. $680 sellers here. Come back into Monday. You got to break this here, don't you? No. There's the halfback trade. We are in buy the dip. That breaks the half hour. There's the hourly trigger right there. Man, this is ugly. Oh, you like that right there? Is that what you like for next week, Monday? There's your 15th dip buy right there. See it? Bunch of fucking bears. One, two, three, 4, 5. That gets bought. There's your halfback trade. That's the best you can hope for there. There is another argument with this weekly being open that it opens these doors down below here. But there's another line hiding in here. Let's look at this really quick. Right here. That's where it is right there. This is where the gap is right here. See the gap all the way down here? Oh, God, these fucking, these fucking bears. So you got push up, pain, squeeze, sell calls. Swoop down here, sweep them up, the 15th. And then you're into the April pricing in over here. There's 27th, 29th, 28th, 29th. Here's Wednesday, 2 p.m. Oh my God, everything's awful. It's all terrible. So you sweep down here, you get the everything is awesome trade, right? Break up and over. Fade down in here. And then the escape right here. Everything is awesome trade, right? Here, maybe we can even go a little bit lower. Hold on. We'll get the bears. Oh, God, yeah, it's so awful. It's terrible. Oh, we bounced. Oh, my God, we went down and did that one. Oh, it's all terrible. Here's your equal legs. Sell down into your doom. Don't worry, bro. Everything's fine. We're out of here. We're just like that. Nice, beautiful, fucking fat fucking thing right there. You can see it right there. It's like doom, doom, doom and gloom. Let out. Oh my God, everything is fine. Oh my God. Oh, the fucking. Oh yeah. Oh my God, they saved the market again. Oh my God. Yeah. Blow up the Strait of Hormuz. Okay. Taco Tuesday. We're back up here again. Oh my God, we got to deal with the bullshit again. And look at this big dose sell calls, sell the calls. And then you come out into the new month. Hey. Come into the new month of May. And some unwinding. We finally break above. We start making that matter up there for May. Before you know it, we're in June. You get the gist, right? So gross. You can probably track this just like this. It's so gross. It's right here. It's this price. This is the one we got stuck on. It's somewhere in here. Range expansion. So you're up here, you're down here, you're up here, you're down there. Whoop, sorry. That was wrong. Up here, down there, up here, down there. Unclench. You know what I mean? Like the doom into this is or tax day. FOMC, fuck you, everything's awful. Oh my God, they raised rates, dude. The economy's dude, they raised rates horrible. Yeah, you know what? The raising rates though is good for us. Economy's okay. We're back up here, back down again. Boom up into end of May. Everybody's honky dory. New all time high in June. July, everybody's all pumped up to trade like 8,000, and then they suck you in to the sideways trade in summer. And we're just range bound in here. We're digesting. And then before you know it, we're rolling down into fall. And then we get an explosive move up into the end of the year. Explosive diarrhea of cash and money. So right in here. These are your expectations into tomorrow. Remember that we must hold, on SPY in particular, we must hold the half hour and hourly trigger. So this should come here. This should go up here. This should all get bought. We start pushing. And here's your hourly trigger right here. Forget SPX. The basis is lower because the reason I'm saying that is because this comes up here. It starts pumping, or we start losing the half an hour trigger and the half hour in here, or even over here. And then before you know it, it's downtown. So unlike SPX, where the half an hour and hourly is lower, just remember that we can easily blast down here. The SPX hourly trigger is only right here, right now. This is where the half hour trigger is in SPX. So if we lose the half an hour and the hour up here at any point, even if it's right here, we start blasting down. Watch out, because it's straight fucking down. It's like literally straight fucking down. Well, not that deep. It's like right here. It's not as deep as you think. Maybe we clean up some of the gap down here and come back up. But you get the idea here, right? Hold this, squeeze it up, squeeze it up. This is 7 a.m. on Friday. Makes sense. Nice little high on Friday morning. Trump comes out, pisses all over the Iranians. The Iranians come out, they piss all over him. You know, nonsense. Or, I don't know, Trump sucks them off for a little while, then starts fighting with them. Something like that. All of a sudden, Strait of Hormuz matters over the weekend. Before you know it, the Strait of Hormuz is solved by when? By the 15th. Everything is honky-dory again, bro. Oh, my God, we're going up. Hey, now we got the IRS gave everybody money. Everything's fine again. And then you get into the end of the month. And this is where the doom comes from. So, oh my God, we got April 15th money. Oh my God, we got to price in the rate hike, and the rate hike is bad for the economy. And then all of a sudden, like the post rate hike, Trump comes out and he's like, or not Trump, Jerome comes out and he's like, don't worry, everything is fine. A rate hike is good for the economy. And then you get the spin from Wall Street. They tell you everything is fine. Oh my God, dude, by the way, that rate hike wasn't bad. We had to price it in, bro, but everything is great. And then we're out of there. Make sense? If you are a bull, I want you to pay very close attention to this right here. If you are a bull at any time, Pravorsky said to you earlier today, this is unstable. I agree. We are trading a 1-minute target right here. If you are a bull, if you are a loser in the market, I think I repeated this morning. I'll repeat it again. If you are a bull in the market, I want you to snap a line like this at home, something like this. If you're a major loser in the market, if you look at your P&L, is your P&L green or red? If it's fucking red, if your P&L is red, you are looking, no, not the breakout trade, not that trade. You're not looking for that fucking thing. You're just looking to ride the train. You can ride the train. You can get down here. Anything down here. You're rocket science. No, bear, we're not doing that. We're not doing that. Nothing's falling apart. And no, we're not breaking up and out and away. We're not trading 8,000. We're not trading 6,000. At the moment, we're not. For the information that we have available, something like this. Make sense? There's a lot of money in here. A whole bunch of money. If we can get it down here, there's fucking beautiful money on that spike. If you're a bull out there, there's some juice in here. You make some serious money. And you get the escape in May. You know, you're just like partying, boom, big moves up, right? Big moves up into June, July. And it's going to be sexy. You'll be a happy trader. Get an all-time high, middle of summer. You know they're going to want to sell you here too, right? You want to smash you right here, take you back down again, back up again, fight them 2-3 times to break out. And these fuckers up here are going to want to stop you here again. Expectations into tomorrow. If you're a poor trader, I don't know that this trade is worth it for you. I like the idea here for where we are to be trying to sell one of these rather than trade this up. I also like the idea of becoming a seller if you don't like being on sell side. I like the idea of locking in your gains on any loss. We lose this here, or we lose this, start doing this shit into tomorrow, doing this. Any of this nonsense over here, trading sideways, fading, start losing this, you're risk off. If you're sell side, I think this is a good place to tee off. You have to be able to absorb any trades up here to get the roll. I think you're better served with longing oil in here, or working that IWM trade. Like you work that IWM trade here, you watch for the bounce here. If there's any bounce in here in the 15th, you're back on that IWM trade, trying to trade this down. Even if it takes into this to trade this down, price target's over here. I I think the IWM trade will be more fruitful, or even the long oil trade could be fruitful for a period of time into May, call it first week of May. This is a nice place to be a seller. Even if they get the pop up here, I still think they're going to be winners. You know, wait a day, and they're still winners. I think even a put spread in here, right where we are, is fine. I'd be dating it for like mid-May, and then I'd be trying to close it by first week of May at the latest. If you get the print before we ever get there, you know you don't sit in the trade. You're not like, oh, you're not like this. I'm max short, and I'm going to stay short. Don't be that guy. Just get out, take your money, and run. They're going to try to, the buyer's going to come in and buy this the whole way, right up into summertime. They'll buy this fucking thing. They've already done it. They've done it here. They did it here. They did it here. They did it here. These buyers are anything down here. Anything down here, they're buying. So they're gonna attempt to buy this. Even if they're unsuccessful, they'll attempt to buy this. Like, all your dip buyers are here. See it right there? Like, all these fuckers are going to come in. They're going to try to fucking buy this shit. They're going to be fucking, they'll buy anything down here. They'll even buy this shit down here. They'll even buy this. Like, they're stacked. This is definitely buy the dip. They're like, they'll buy this fucking thing. They'll buy this fucking thing right here. They'll buy this fucking thing right here. Buyers, pants on fires for a summer print. Does that help? And we're going to go back to that's your expectations. Want to see it? I'll post it for you in the Discord. Sorry about that. Hold on. That was actually pretty good. Let me. Okay, there we go. I gotta start making Nope, that's wrong. Let me go to the pro channel real quick. This is your one. I would not trust the hourly at this point either. See this hourly? Well, I would trust the hourly. I would trust the hourly right now. We're above the W. I like the hourly now. It's coming above the weekly. Unless we break under it. If we break under it, we're fucked. But I like the hourly coming above right now, those two numbers. You might have to be a seller today. If you're a cash market trader, this might be your only chance. Even if we pop up here into the overnight. I don't know if this will hold beyond. I don't know if this will hold into. Let's go look at this again. I don't know if this will hold. Where's 682.50? Oh, it's right here. I don't know if it'll hold into the open tomorrow. You might be just as good of buying. Might just be good putting a hedge on. I might have to put a hedge on here today. Yeah, I think with enough time, this is okay. It ain't gonna matter if we squeeze. This might be the place to put a hedge on for a cash market trader. Futures traders can likely fucking sell high up here. Futures traders have better positioning. I can't tell if this will hold at 9:30 tomorrow or not, or 10. This could be at like 10 a.m. This could actually be the close tomorrow. But I got it at 7 right now. I got it at where's that? I got it at like that's like 6:50 in the morning, 7 a.m. Maybe another pop up, like in a 10 a.m. or something. I love that right there. God, yes. I don't know if we can get that cash market positioning. Is my point. This could be rolling by the time we could be like right fucking back here by 10 a.m. If you're a cash market trader, you could potentially sell this close. You could potentially sell like 415, 414. You'd have to be able to weather a squeeze on open tomorrow. I just don't know how long it'll hold. If you miss it, though, there's a ton of down, so unless they crater this fucker before we get into the Friday negotiations, maybe Trump is throwing shit or something. You guys do? What's going on, boys? You guys miss me? I miss you too. Why are you guys around? What's going on? This is a tough call here. Potentially you could sell like 414 this afternoon, but if you encounter pain tomorrow, close your laptops and come back on Monday. As that would be the only thing I could say to you. Close laptops and come back. And there's another argument here too. Like, no, I don't want to say that. That's not true. I don't want to say that. I was going to make an argument that because we're in buy the dip, it won't be that destructive. But the argument I'm trying to make is don't sell it until it loses the half an hour and hourly. Is basically the argument. You'd still be if you didn't want to do a put spread in the close, you'd still be trying to buy the dip until you actually lose it on the half an hour and hour. the market would be more resilient. If you sell this, don't sell this. I'll say that. If you're going to sell this, do not get a put spread on SPY. Get it on fucking IWM. And put that fucker on for a date in like mid-May to close in and around the rate decision. And if you can get like a nice spike down on that rate decision, you'd close it right then and there. It's probably the safest. There could be an argument made that you're not even selling. There could be an argument made that you're just looking for any doomed buy on buy the dip. And I don't think that matters what that dip is. I think if we're going back and buy the dip, even if we get the CTAs blasting through 6775 to 6600, you'd miss out on a trade, but the edge is to the buyer, not the seller of rips. It is slightly. I have to think about that this evening, but you could make an argument for the buyer saying you don't even sell, you could hedge, but you're still just looking to buy dips, whether it holds on the hour or half hour, whether it goes to the daily, it doesn't matter. You're just in an accumulation into summer, and you don't want to be left behind. There could be that argument could be made. I just don't want to make it because if they get blasted down to the daily trigger and they're all like, well, what happened? And my structure, my trade is not good, and I'm in pain and all that kind of stuff. And then all of a sudden it prints. That's a tough one to call. I think you get the gist, though. Theoretically, you could hedge this close, put a lot of time on it, and I would make it a little bit more in the money to get a nice fat print. Or just sell calls. That would work, too. You just sell call. You could be selling calls or put spread hedge would be nice on IWM or long oil either today or tomorrow. Longing oil maybe tomorrow would be better. I would assume it would take all day long for the talks to break down all weekend. I mean, they got fucking 4 days for talks to break down. So you figure no breakdown of talks immediately. And if talks don't break down, you'd be fucked. You'd still have the oil trade. It would be resilient at least. I like the idea of longing oil, and I like the idea of the security of like longing oil, even if there's an agreement. Oil stays bid, and then I like the other idea of pricing in a rate cut on small caps as the vehicle. It's hard on indexes to say it's going to go that deep. I'm trying to show you the worst outcome, and I don't know if you're even going to get that worst outcome. You might not. I'm like mixing ideas here. Not mixing, but let me put this back up so you can see where there's our 2. There's our R3 right there. And there's your 3 distributions right here. 1, 2, 3. And the break of this right here is where it gets fucking nasty. Right down there. If you're a traditional chartist, that's what it looked like. Something like that. There's something else fascinating about these things is you have to get the new high and you can't give this up. Whatever this bottom is, you can't give it up. Even if it's down here, it has to go like up. Then you have to like hold it. You have to like hold whatever that line is that's created. This is the distribution right here. Like you have to get the new high and you have to hold the lows all the way up. That's how you know you break the distribution too. Like if you're down here and losing it, that's where the half hour is. That's like an early distribution. Sometimes with these, we lose these fucking things early. They're not to be trust. Don't ever trust the distribution. If you don't know this, this is distribution. There's a bunch of rules to it. Like, you need to hold the lows, higher highs, or at least the first low. You have to hold, and you need a series of new highs. And when you stop getting the series of new highs and you start breaking the trend, it's a bloodbath. And sometimes these play out perfect, and sometimes they're early. Sometimes you'll see you'll see the high. You'll come back down to stay in trend, and it'll break early. And you're like, well, bro, we're supposed to go there, but down depths of hell. Be very careful with these distributions. You have to follow the rules on them. That's why I'm like, yeah, this close, they could potentially go in here and just call that one. You got to deal with one more potentially. Let's watch it together. So goddamn good. Oof. It's even higher. I'd like to take that one out. I really want to take that one out. And then that one right there. Something like that. That's that one right there. Down. Up. Sanctions relief on Russian oil expires on April 11th. I'm just checking some stuff in the background here. I'll just close the gap. That's a little wonky, isn't it? It's a little aggressive there. This is going to be juicy in here. So if you get the pop up here higher to a 5-minute check back, like right in here somewhere, and then that's a fucking ripper.
US Trade Representative Greer says no deliverables on autos planned for Trump-Xi meeting. Greer says meeting planned Friday with Chinese officials to discuss policy outcomes for Trump-Xi meeting. And Greer says Trump administration sees no changes in connected vehicle rules that effectively bar Chinese autos from the US market. Greer said it would probably be difficult for Chinese automakers to establish US production given connected vehicle rules.
They're never allowing Chinese vehicles in the US. That ain't never happening. You're never going to see a Chinese car in this country, ever. Yeah, you can, but it's expensive. You're not going to see an auto dealer. And sure as shit not seeing manufacturing. Hmm. I'm going to remove this just so we can watch into the close here. Let me see something here, guys. So make a quick post here. Sorry about that. I had to do a quick snip. What if the I just described it all inside of the Discord and the Pro channel. Just looking to take this one out right here. Right there, that one right there. And half back trade, quick pullback. Now going up to finish this one. This is one move still. So terrible. Well, there you go. Oh, yeah. Oh, yeah. Ooh. Ooh, yeah. Oh, God, yeah. Sorry, I'm talking to myself over here. Oh, yeah. Just buy that dip right there, too. I want to put that one right there next. Oh, yeah. Yeah, do that one, too. You can just fucking slam it home. Slam it home to the upside. Okay, buy this dip right here. But let's watch. Oh, this one's a little bit higher. Okay, there's the 5-minute trigger, but if you get flushed, it's right there. Should I just remove this? We don't need to see this anymore, do we? It's kind of in the way, isn't it? It's in the fucking way. We don't fucking need that thing in there. Just fucking do this. Just do it. Let's wing it. You guys know where all the levels are, right? Fuck it. We'll do it live. God damn it. Yeah, he went on a fucking rant. It was crazy. Oh no, he had a whole thing. He was like, "What about this over here? And what about that over there?" And it was like a 2-minute temper tantrum. And they caught it on film because you never see those guys. Like you see me freak out on camera. Where we actually do it live. God damn it, I'm taking my toys and going home. Fuck this market. I've done that on this show. Turn the fucking stream off. I'm out of here. I've had enough pain today. I lost 15 grand. Get me the fuck out of this stream. Those days suck. I'm not gonna lie. Every day there's a really good day, I will suck the fucking life out of it. Like if there's like a really good trade, I'm just like, I would need to live on this for a few days. I don't mean with money, I mean with mentality. the mentalness of it. Oh, sorry, princess. I apologize. So my bad. I thought I had a thing on this. I thought I had a compressor on my voice when I'm screaming. I wonder who's long into this close. It's kind of a weird close. Like, I can see the argument that we're going to be blood by open, New York cash open. I can also see the argument that we have like one more high to put in at 12 or 10 or 12 tomorrow. That'd be the sweetest fucking way to do it. The Bulls will love Trump. Someone get a message to Trump to shut the fuck up till 10 a.m. Like someone get like just a reader card in the back. Be good till 10 a.m. 12 p.m. Then do whatever you want after 12 tomorrow. Fucking, I don't care what you do. Like someone just get out. Like if you know Trump, actually I know. I'm too ready for that. You guys probably don't know this. I'm like degrees of separation from Trump in the White House. You ready? 2. Me, that person, and the White House. That's how close it is. So if you know me and you know your friends in the White House and you're watching the show right now, tell fucking Trump tomorrow to be good until 10 a.m. Kevin Jim James is requesting that you please be nice until 10 a.m. Let all the Bulls exit in orderly fashion. Make the Bears suffer. We ask for 10, we'll take 12 or 2 in the afternoon tomorrow. And then do whatever you want. We don't care. It's the end of the world. Tell them you're going to end the world tomorrow. I shit you not, on Tuesday. Like, I hated that show. I fucking hated it. I hated Tuesday's show. I mean, I love the money, but, like, I hated doing that show. I hate, I hate, that was a pure hate. I had to think about it yesterday. I was trying to decompress yesterday, too. I'm, like, really sick yesterday. By the way, a few things. I'm still sick. Yesterday, I was ultra ill. When I woke up yesterday morning, I was, like, no voice, no nothing. I felt like I was hungover. It was really fucked up. Like, plus I had a few drinks on Tuesday night. I stayed up all night long to watch my shit. And then I had to close my shit on Wednesday morning, right? Yesterday morning. And I'm like, I don't feel well at all, right? But then yesterday, I'm like catching up on economic data and I'm catching up on my health. And all I could think to myself yesterday was, I fucking hated doing that show Tuesday. There's only a few shows I've ever hated doing. Well, yesterday was one of them. I despise like the end of the world show. I hate it. Like, because I'm always like, if that ever happens and I'm streaming live, I never want that eventuality. I don't ever want to do a show when like a 9/11 happens or some fucking horrible fucking thing. I don't want to do that show. I don't want to be live one day when something fucking really, truly awful happens. And this is like worse than COVID too. You know what? The kind of bad, like COVID was bad, but you kind of saw the freight train coming the whole way. And everybody participated in it. But like that one moment, that show, I don't ever want to do the show where I'm sitting here and something like really horrific takes place. So I despise streaming on Tuesday morning. I really did. I didn't want to be on stream Tuesday. I honestly didn't. It kicked the shit out of me. Tuesday's show. It really did. And what's really weird too is like I'm part of the Nothing Ever Happens crowd. And I'm part of the this isn't going to happen, but I don't like streaming them because they're very rare when they happen. Those kind of streams, they're very, very rare. When we get into those moments, I'm like, I need a fucking delay in the show, or like we can cut the commercial or something, like they would do on a regular TV show or whatever. But I hate doing the shows, like hate them, because if the bad thing really happens, like if something really awful happened, like I don't want to say what could happen, but you could already have the idea. If that happened and I was streaming, I wouldn't want to stream it. I want to come back to stream it later. I don't find any. I feel gross with the like the blood on your hands kind of a concept in my head, and I know like if you're hearing me say that, you're like, it's no big deal. Nothing was going to happen. When you're the guy on the other end doing the actual talking, if it does happen to you, it's going to be awful. You know, it really is. Unless you're like a fucking sociopath or something. As I fucking hated streaming Tuesday, especially like the early part of the day. And as soon as I heard the Pakistan thing, I was like, that's the only fucking country that could do this. That's the out that Trump was needing. So I felt better, of course. It was like relief, like endorphin dumps and stuff. But I didn't want so not yesterday, Tuesday stream. The biggest fear I had like Monday and Tuesday over the weekend, but it got more prevalent, or it started to affect me more into Tuesday. Was does he fucking do something horrible like right before the decision? He's done that in the past where he's invaded. Like he'll say, I'll give you 48 hours. And then, or fucking 5 days or something, or I'll give you a week or two. And then he's invading over that weekend. And I'm like, please don't do anything into the deadline at 8 p.m. Like, I don't want to hear about anything awful. And I didn't want Iran to do anything awful either. It's not just them. And it's Israel too. You never know if that moment ever takes place. Like someone just says, fuck it, I'm hitting the button or some shit like that, or I'm walking the backpack over, or fucking doing some other kind of fucking nefarious thing, like poisoning the water supply or something insane, something fucking insane. And, God. Anyways, I don't know why I'm talking about that right now, but you guys can at least get where I'm at. That t-shirt, I should remake that. That's not a good t-shirt, by the way. So they lost. The Patriots lost that game. They lost that game like 40-0, 40-7 or something, 51-7. But it was a good t-shirt. We should change the E to a U though. I think the berry refers to Perry. I could be wrong, but I think it refers to Perry. Refrigerator Perry. I could be wrong on that, but I think it does. It could be broken. That's possible. It freezes up sometimes. Yeah, it's freezing. Thanks for saying something about Bookmap. I'm not watching it currently. Hold on. Let me just one quick second here and I'll bring it up. Let's see if I can fix it here for you. I'll fix it live. I'll fix it live. You guys aren't following my fucking drawings? Fuck you and your Bookmap. I'm gonna turn that shit off on you. Nobody gives a fuck about Bookmap. Doggone it, hates me now. It's like cursing me. Can I deactivate it? Activate? Oh, now it's gone. Now I'm totally fucked. Camlink shit the bed. Now it's gone. God damn it. Maybe that'll work? Oh no, I'm losing it. I've already lost it. It's gone now. I didn't mean to do that. I got to cut to a commercial. Could you guys mind liking and subscribing? Hey, by the way, this is real. If you're watching this show and you don't hate my guts, so a 9-year-old says to another 9-year-old, I hate your guts. So sisters and brothers and shit, I hate your guts. If you don't hate my guts, what is this? Oh, Gato virtual cam. That's gonna be black too. If you don't hate me, and you're watching me on Kick or Twitter or Twitch, any of those places, or if you're watching me in a blog somewhere, because I know that we're recasting blogs too. I don't self-promote enough. I should be like a sellout here, and I'm not. Damn it, I'm gonna have to do this over again. I'm gonna have to get a new cam link. The cam link butthole is dead. Can you go onto YouTube and follow me and like the video? But the more important one is follow me on YouTube. Subscribe, it's free. And maybe do Twitch as a bonus, but I want YouTube if possible. I don't never run ads here. I rarely do I ask for a follower. If you don't mind doing that for me. I think I'm close to 10,000 followers on YouTube. Let me just check. I wanted to get over the hump. I want you to know that I don't buy followers. And I can and I don't. And no one would ever know. I'm at 9.86 thousand followers. So I'm putting a call for help out to get to 10,000 followers. I would really appreciate it. So if you don't follow me on YouTube, it's called The Stock Market Show or Captain Jim James. If you could follow me on YouTube, I'd appreciate it. It really does mean a lot to me. I don't buy followers. I don't fake anything. And people do that shit all the time. They do it on Twitter. They do it on YouTube. They do it everywhere. I don't do any of that fucking shit. And I have people that work for me here that you guys know. If you ever speak to them in private, and if I'm ever looking for help, can you push this thing or that thing? It's very rare. I worked really hard to get to 10,000 fucking subscribers on YouTube naturally. And I don't do any of the sizzle selling. I don't do any of the, every time I'll do a shit post of shit sometimes, but nowhere near the level of grift that fucking influencers do. I don't believe in it. I want nothing to do with it. So if you could follow me on YouTube, I would appreciate it. A like and a subscribe. Even if you maybe dump me in a month or 2 or 3 months, something like that, I would appreciate it. Maybe subscribe and then block me or something. I don't know. But if you're watching me somewhere else like Twitch, Kick or Twitter or whatever, I would really appreciate it if you're watching the show. I wanted to ask the past week. It's not easy to get over 10,000 subscribers. It's fucking brutal. If you've ever done anything naturally, no faking it, no bullshitting, and you were true to yourself and you didn't sell out to get there, it is fucking hard. It is so brutal. Everything is against you. So I would have really appreciated it if you did. And I thank you very much for doing that. And I really appreciate you. I've been meaning to say that now for a week, and I keep forgetting. You'd think it would be on my top bucket list. Oh, let's get more followers, but it's not. It never is. So I'm very grateful to you for following. Maybe tell your friends or some. Tell your brother, your sister, your friend, someone in your office, whoever that may be, a real person. I fucking hate bots. I fucking hate the grift. I hate the fucking lying and all that other stupid shit. So try to keep things in life as real as possible. So I appreciate you out there if you're doing that right now. Thank you. I'm so fucking close. I keep watching it and I'm like, oh God. And I don't know. It's hard work. Every follower, every subscriber, you have to keep their trusts and their faith and all that other shit. And they got to listen to you all day long. So I appreciate it if you could do that. And it is closed. Thank you. Yeah. Fucking follower buyers. God damn. I had a guy show me that shit once. I had a fucking guy, you can't do it anymore. This is more how fucked up shit is. So back in the day, before Twitter turned off their data, so where anyone could access it, you could literally go in and see all the high follow accounts and where they bought their followers. You could show the thousands of I bought 1,000, I bought 1,000, I bought 1,000, and they did. Some people do it slowly, some people do it really quickly. But you can just see them. It's not how good they are. It's a circle of things. It's I'm going to do this, I'm going to do that, I'm going to ask questions, I'm going to interact, I'm going to then a whole bunch of it is buying followers. And once those guys buy enough followers, then they get natural traction. It's all fucked up. So, well, you didn't think that was going to hold? That's going to hold. We're gonna fucking squeeze titties off up into the top here. All you men out there, take your shirts and rip them off right now and show me your titties. Show me your man boobs. Flap them for me. We're gonna squeeze those titties off. I'm telling you. We're going up there. Trust me, they're gonna squeeze the shit out of this. Probably stay long right into 415. I'm gonna squeeze the piss out of this in the close. You're gonna go out on a bang and a high. There's no time left. You know they can't trust them tomorrow. You know they're gonna be fighting. So they have a bunch of cats fighting with each other. It's like what's the fucking movie where they had David and Goliath with Jack Black, or even the is it like Night at the Museum or something where they got the fucking guys with the spears and shit? It's like the Houthis and the fucking Israelis and the fucking Lebanese and the fucking like all this like sideshow going on, wanting to fucking kill each other out there. Crazy people, man. Like, I don't get it. I don't get wanting to end the entire world. You see who that is right there? I got look. Answer that phone for me, will you? I got a bunch of shit going on. I got like fucking business, stupid shit everywhere going on. Thank you. Anybody ready for sailing season? Anybody out there getting out sailing yet? I'm getting pumped for it right now. I went and looked at boats. I sold my boat and I went and looked at 30 and 40 footers. I did. Our sailing season has not begun yet. Ooh, I want to talk to you about a couple other things in this close. Did you guys see that the weather pattern is fucked for next year? For ski, if you're a skier, we're fucked. I want a short fucking Vail Resorts down into the shitter for next year. Like to zero. And I keep thinking about boating this spring. I had a bunch of thoughts about boating this summer. So I sold my sailboat, and I was like, well, I'll wait until I retire to get something. Then I was like, well, fuck it. Maybe I'll just go down to the I'll just use the boats on the marina. And then I was like, well, maybe I'll buy a boat just for this year. Just not a big boat, like a I got 30 footer, 33 maybe, 37 foot. Yes, mono hull for the Great Lakes for a year or two. I could always sell it again. Hopefully sell it, but I was thinking about my summer this year. Like, when am I going to start boating? When do the beer can races start? And I was thinking about like what was else I was thinking about? I was thinking about buying a boat. I should not buy a boat. It's better to rent a boat or borrow somebody else's boat. It's always better to be like the guy that pays the gas, brings the beer, brings all the bitches. I shouldn't say that, sorry. Those are men, by the way. I bring men with me. I bring a bunch of playboys with me. Bunch of dudes hanging out in a boat. What are a bunch of dudes going to do in a boat together? All the Navy people are mad at me right now. Come on, squeeze. You know you're going to do it. Just keep squeezing. Get up there. Come on now. Let's do it. Get your ass up there. We're not done. I got to fucking sell calls, bro. Get me up to fucking 68.60. We ain't got a lot of time left. Squeeze them. Stop buying zero dates. They're gonna counter trade us into the close. I gotta get this done by 4:15. You should have already been in zero dates. I was thinking boat. I mean, I'm gonna do the fucking, like, I don't belong to a sailing club per se. I'm not a member. I'm more a member of a marina. They like to drink. They care more about the drinking and the swimming and the fucking around than they do the business deals. We have got like three. We have a bunch more outside of Detroit, but we basically have three yacht clubs, And there's like the super serial one. This is where all the Republicans. I shouldn't say that. We have the one where like all the young entrepreneurs and all the young finance bros join. I don't belong to that one. They all want to get married in there and all that kind of shit, and it's all prim and proper. And then they got like a cool guy one. That's where I belong. it's like we drink beer and party, but it's way less. It's way more chill. And then we got one more. We got one more that's a real marina. It's just a marina. They ain't got shit. So I'm like right in the middle. I don't think I'll ever join the. I don't think I'd fit in with. I don't think I'd fit in with one of those crowds. I could probably blend in, but I don't like doing that. Like I feel comfortable. I want to feel comfortable. I don't want to sit next to some old CFO from Ford as he's like farting next to me, fucking drinking Miller Lite and shit. Fuck that guy. Let that guy. I got plenty of time to be that guy. I'll try that suit on when I'm like 80 or something. After I'm done going after your wife in the old man home and spreading venereal diseases around. I gotta stay alive though. I'm gonna die. I'll probably be the guy that's died and dead, and they're going after my wife. Hold on here. Turn that off. Sorry for the black comedy here. Coming in at 4 p.m. We'll see if we can catch this up before 4:15. We got 3 minutes left. Yeah, I'm already thinking about spring. Like, I want to go sailing. I want my own fucking boat, though, to do it again. I fucking hate having to use other people's shit. I like using my own shit. But, so anyways, on that same topic, right? I actually looked at power boats. I was like, if I'm not ready to buy the boat of my dreams, then the sailboat of my dreams, maybe I just buy a fucking power boat, and I'll join all the fucking bros from Detroit. I'll go to the fucking. I'll just start powerboating everywhere. It's like powerboats are way easier than sailboats. It's easier all the way around. It's more costly, but it's way easier, more fun. Or it depends on what fun you're looking for. But I was like, well, could I have a powerboat? I don't know, like a cabin cruiser or a something. I'm like definitely like but like not being a sailor and being a powerboater is definitely against my ethos. I enjoy the ride there. Well, like I was thinking, remember the time when I fucking when my oldest daughter fell off the back of a boat and I had to jump in after her? That was bad. I didn't realize how fucking dangerous that was. I felt scared because it was like the chasm underneath me. But I felt it when I was in there, but I couldn't think about that. I think about my daughter fell off a boat once going like fucking 30 miles an hour. And I fucking jumped in after her, right off the back. Fucking right off the back. I literally ran from the front of the boat to the back of the boat, hucked myself off the back of the boat, and my fucking dog chased me. I had to like drag my daughter out of the water, and then the fucking dog tried to kill me. Like the dog tried to kill me. My daughter was fine. My dog tried to fucking kill me. And then to get the dog back in the boat, oh no, that was not fun. If you've ever tried to get a dog back in this high side of a boat, oh man. Ooh, no fun. Thought I was gonna die. I'm a good swimmer though. But I'm too old. Like that's the other thing. I'm too fucking old. I am. Like one of these fucking days, that's how I'm gonna die. I already know how I'm gonna die. It's gonna be something stupid like, oh, he's called himself a strong swimmer. Fucking dead of swimming, 50 years old. Thought he was a fucking badass at 50. dead man. Well, here we go. Coming to the close right now. That's a true fucking story. My wife just brought it up. I forgot about it. And if you've never jumped off the back of a boat at a high rate of speed, your pants come right off. You're buck naked. Like, woof, gone. All right, that's the day. You pick your poison here, boys and girls. I want you to know that I was just describing this to the pro traders. You need to know what distribution looks like, and you need to know that we need continuation. And if you lose continuation at any point, new low, there to get a new high. These things tend to fall apart. Not always, but they tend to fall apart at some point. Meaning that this here, the reason I put the 1, 2, 3 is because it's like a pick your poison thing. You can pick it here, pick it here, pick it here. Sometimes we get the full distribution. Sometimes it's, surprise, motherfucker, and we're going down already. So just be aware of that as we move forward. This is probably the safest seller here and the least safest seller there. But if you are going to wait, you can. You just have to be Johnny on the spot if we do lose the distribution to be able to sell on the jiffy. So I'll get back with you tomorrow at 9:30 in the morning. There's no other expectation for tomorrow. You guys, I think you're all aware. We'll spend, if you don't want to watch the show tomorrow, if you do, there's a few things here about tomorrow. You're likely not going to see us spend too much time on the negotiations. We'll spend time on the news squawker listening to it. But I'm not going to do like the live fucking show with them yelling at each other, any of that kind of nonsense. We're going to spend Friday hopefully positioning for a roll into the weekend. And we're also going to spend Friday wrapping up all of this econ data, because what we're going to do at some point is I'll touch on econ data. And we have CPI tomorrow at 8:30 in the morning. So I want you to have a reference point for this stuff so that I don't have to go over it so deep. We need to get back into the idea of, hey, we got CPI tomorrow. Hey, we got NFP on Friday. Hey, we're checking in with this thing over this big fucking burning dumpster fire in the Middle East. And unless that dumpster fire gets worse, and I mean worse, like we were on Tuesday, and we need to be at that place on Tuesday for us to refocus on it again. Otherwise, we're going to start to look at other things coming our way. Economic data, elections, tariffs, stance of the Fed, stance of the Treasury Department, stance of the bond market. And I want you guys to get back into speed on what the market will start to react to as we begin or attempt to rear view mirror some of this stuff. So it's not just front and center. We've spent like the last month and a half on literal war headline risk. It's been nonstop. So hopefully we can start to shift gears a little bit, get into a little bit of that spring mode, and get into a little, even if we have lows, get in a little bit of that spring mode for a nice summer print. So we can all be fat and happy when we get into the summertime, and you're not begging me or telling me we're going to moon when we're going to go sideways. So start that shifting of gears. Like at least start, even if you don't want to, just try to start to like attempt, like at least be open to a shifting of narrative. It'll take time, but I want you to shift narratives into like inflation doom, rate hikes, and IRS deadlines, all that kind of stuff. Like try to get off of the geopolitical doom. It's been a solid 2 months. So maybe not 2 months, but month and a half, 2 months of headline risk. And I think it looks like everybody wants to get away from it, including Trump in the U.S. They might not be able to. Maybe Iran doesn't allow that to happen, but we'll deal with it if that happens. But just be aware of it to try to like change your maybe not jog memory, like try to like shift gears if you can, because you'll end up getting potentially left behind as everyone else is talking about the shit and focusing on other things. The market's hitting inflection points that are working off of other information. And we'll slow roll into that over the course of the next couple of weeks, and we'll get you all back up to speed. And we'll start looking for if the market stops reacting so frequently to anything that comes out of the Middle East. I hope that we can do that. That would be a sign of improving things. So, and if we can't, we'll do other stuff. We'll stay on that fucking topic if we have to. You have yourself a great night. I'll see you all tomorrow on Friday, and I look forward to finding out if we can sell this fucking shit to the depths of hell. This is a nice trade in here. This could be juicy, and could take some time into the end of the month. It'd be kind of nice to be a seller on a high, and be able to watch the bulls cry all the way down, and yet keep the market intact, and then be able to take a nice big fat summer trade, a nice big fat low. I'll see you all tomorrow. Oh, Josh is like, it's top, baby. That is the top. He's like, you're counting pennies now, bro. Josh is like, that was the top. He could be right. I'll try to find it. I made it. I'll try to find you the song. I have it on my desktop. There's no other copy of it. It's mine. I own it. I'll send it to you. Important contributor. I'll send it to you.